Very good evening, everyone. Can someone confirm me on the audio and video? Is audio and video clear to all of you? Okay, I think I have confirmation on the audio and video. I think it's working fine. So if there is any issue with my audio video, I would recommend all of you guys to comment on the chat. I'm seeing the chat even though I'm taking it live from here. I'm seeing the chat, so it's going to be like live and interactive, and I think it's very important for all of you. I think you all should be super happy to see me because I'm here to help you guys. We're going to I'm going to give you a quick rapid revision on whatever topics that we have on the chart notes. So it's going to be like super crisp in terms of the concept discussion, and believe me, this is my third marathon revision, and I've had students who's coming back and saying me like that 5 hours that you have spent in terms of understanding the concept on the day before, that gave you all a quick revision, and that what mattered the difference. So I hope that it works the same magic for all of you for day after tomorrow's examination. So here is the starting point. I wanted to tell you what is going to be your agenda for today and tomorrow. This is my suggestion. Very carefully listen to me. First thing that you have to do, if you see that any of your friends would not be studying something with the plan today, just drag them and put them into this link. Okay, just ensure that they are actually available on YouTube, and share them this link. Call them up and tell them that okay, so there is a revision that has started by Lijil Lakshman sir, and then you gotta come and then spend some time here so that some efforts is done for today. Because after an examination, I have written examination, so after an examination generally it is going to be like so we'll all be like somewhat tired, right? So generally it happens that we will not be able to sit and study for the day at night. So what you can do is just listen to someone. Okay, so that's what I am asking you for. So just listen and get the GST understanding done. So somebody is commenting that the sound is low. Let me quickly look at is that sound low for everyone? It's clear, everybody's saying. So I hope there is no issue. I can always put my mic a little more up so that it might work little more better for people who are having, and you can look at maximizing your network and the volume. That's the best thing to do. Okay, so use earphones. Perfect. Use earphones so that you get the best of experiences. Anyway, so okay, so coming back from what discussion I was doing with all of you in terms of your plans, what I'll again and again I'm repeating this, what I'll totally recommend all of you to do is what I'll recommend all of you to do is that spent the time for today for GST. So what you have to do tomorrow, I'll tell you my level of recommendation for tomorrow as well. Okay, so what you can do for tomorrow is, uh, say in the morning. Okay, what you do in the morning is first thing that I wanted to tell you. Like say tonight you're going to do GST. Okay, so if you have any topics that you're super good in GST and you don't want to listen again, you can always skip that area. But I'll totally recommend, even if you're good at the subject, spare this time, because your effective learning at this point, because you're already spared your entire day writing exam, will be less. So listening to someone is always better at this particular point. I'm coming live, so if you have any specific queries, you can always ask. I'm going to ask you questions. So there's real classes that's going on. Okay, so you're going to do GST with me now. We are going to specialize, or we're going to focus more on amendments. Whatever is going to be there in your day after tomorrow's exam, that will be our objective. And tomorrow you do income tax till evening. Till evening you do income tax full. From the morning till evening you do income tax. Sleep less, like don't plan like 8-10 hours, you're tired and all that, because if you're writing only one group, this is the last thing that you have to do, right? So just give everything that you have got, all the energy that is left in you, just put it into this examination. Tomorrow night again I want you to just look at GST, the RTPs. When you're looking at RTPs, I've already, so if you have not subscribed to my channel, you can do that, see Lijil Lakshman. I have already uploaded RTP discussions on this channel for the last two RTPs. So if you want, you can look at those two RTPs, because if you look at the theory questions in the last two attempt, the understanding has been like the pattern of ICA examination has been that they are asking theory question from RTP, exact same question. So look at the theory question from RTP without any fail at tomorrow evening, and day after tomorrow in the morning again do income tax, and then quickly brush up on this notebook. So what I'm going to do additional, if anybody is here without my chart notes, it will be very difficult for you to do the revision. So what I'm going to do next is, I'm going to share once again on the charts. I'm going to share you guys with absolutely free. Okay, so I'm going to share my chart notes. So you can download if you don't have. I've already shared that drive link again. Just download and look at that. And I want your revision to be with that notes. Okay, so if you already have my crash students, my workout batch students, my regular students, you already have the notes with you. Let's go ahead and then start revision. Now you have the examination coming up day after tomorrow, and amendments is what will become most important, because they are definitely going to ask questions on that. So it's the best to start with amendments. We're going to spare about half an hour to 1 hour time in terms of doing amendments and areas relating to amendments. So shall we start? Are you all having best of your energy left out for the day? So can I have a quick yes in the chat box so that we can start off with it? Just marking everybody is present and available. All right, so okay, so let's start looking at supply chapter, the amendments. This is something that you already know. The first circular amendments that we have had is like this. It says perquisites provided by employer to employee as per the employment contract is clarified as will not be subject to GST. So what provision are they trying to test you here? Perquisites is a non-monetary salary that you're going to receive. So they're saying perquisites, if it is part of your employment contract, it will be a Schedule 3 item, because if you look at Schedule 3, negative list, it talks about items which are not a supply. The first para talks about services by employee to employer in the course of employment, and it is not a supply. So understanding of that will be given even for perquisites. Perquisites are nothing but salary, thereby it will not be subject to GST. Now the next circular is a large circular, and there are lots of areas that they are trying to cover with it. Understanding of liquidated damages or breach of contract of penalty is now different. Which area are we trying to address from here? If you look at Schedule 2, okay, in section 7, supply, Schedule 2 talks about items which are supply of goods, which are supply of service. In para 5, they are talking about a set of activities. Okay, so we are talking about a set of activities which are supply of service. So if you look at set of activities which are supply of service, it talks about a specific wordings. If you look at para 5 clause E, it talks about an activity which has 3 different aspects to it. Let's read this once, because if at all there is a question, you might be wanting to repeat these wordings in your examination. Now the possibility is only this. It talks about activity like this. Following activity is deemed to be supply of service. What activity? Agreeing to an obligation to refrain from an act, to tolerate an act or situation, or to do an act. So they're saying that if you're refraining from acting, it's a service, provided you have an agreement to refrain from acting. To tolerate an act, it's a service. To do an act, it's a service. But they have clarified what will be service there, what will not be service, what are the precondition. To refrain from an act, the easiest example is a non-competency contract. I'm telling you that I will not start a business competing you, you pay me 10 lakh rupees. This is a very simple, straightforward example of what contract? It's a non-competence contract, which is supply of service. If I receive some money for non-competence contract, it's a supply of service. Tolerating an activity, is it a supply of service? Yes. To give you an example, they have given in the notes saying a shop owner, a supermarket like Reliance Smart is allowing a small hawker. Hawker means people who will come with that small, tire bay, small that, the vehicle wherein they are selling pani puris and all that. So this is called as a hawker. Okay, so all these street shops which are hawkers, right? So as Reliance Smart, which is having a supermarket, is allowing a hawker to do business in front of their supermarket and collecting 5,000. This is also a supply of service, because they are agreeing to an obligation to tolerate a hawker being in front of them. Or if you do have an agreement to do something and you're paying some money and asking a particular business to install some measures for zero emission, that's also considered to be a supply of service. So the understanding is that these are all supply of service. It can be refraining, tolerating, to do an act. So they're saying there should be 2 criteria that should be there for you to call it as supply of service. What is it? To summarize, the activity must comply following condition. Number 1, there must be an expressed or implied agreement or contract. You should have an agreement for not doing something. You should have an agreement for tolerating something. You should have an agreement for to do something. So there should be an agreement, and consideration must flow in return to this contract. So when I'm having a contract, that contract should be for me to tolerate something. The contract should be for me to refrain from doing something. Okay. So with this understanding, they're saying that look at certain transaction and certain amount and look at if that will amount to supply of service or not. The first one is liquidated damage. Now the main difference between tolerating something or to refrain something and liquidated damages would be that, say for example, we will take an example to understand this. Okay, we will try to take an example. Say I have given somebody my house for film shooting, and in my contract it says that you should not break anything in my house. If you break, you will have to give me the money of that particular item. And is that contract for them to break and then for me to tolerate, or that contract is for them not to break? The contract is for them to not break. So liquidated damages are not a contract for tolerating something. It's not a contract for refraining for me to do something. It is actually a contract for you to not break something. Okay, so for me, it should not be a contract. It's not a contract where I'm letting you break and then you compensate. It's okay for me. So it cannot be said as a consideration received for tolerating breach. It's a measure of loss only. The contract is entered for execution, not for its breach. The contract says do not break. If the contract is not saying that you break, I'll be okay with it. So thereby liquidated damages are now not taxable. Very important point. If there is an exam question which says liquidated damage, it's not taxable. You will have to write the wordings. The liquidated damages or the contract for liquidated damages, like example, the damage to a property, negligence, piracy, unauthorized use of trade names. So for example, I have given a franchise contract and I told this particular franchisee that you should not be using my name for any other purpose and whatever is listed in the franchise. If you do, I'll file a case and then I'll collect some money from you. Now, if the franchisee is using their unauthorized trade name and then I am collecting some money, is it like my contract is asking them, you use it, you give me some money? No, the contract is not for that. So thereby liquidated damages will not be considered as a supply. It's not subject to GST. But however, like if you look at, there are certain contract, it will become a supply. Like say for example, I am giving, say I sold goods for 1 lakh rupees and I told you will have to make payment within 1 year. Okay, so not 1 year, 1 month. So I sold some goods and I told those customer, you make the payment within 1 month. Okay, so the customer is not making payment within 1 month. My contract says that if you make payment after 1 month, you will have to pay some money for that. Now this contract of late payment of fees, penalty, etc. will be actually a contract wherein you are letting people to do something and you're getting some money. So such contract will be an ancillary to the principal supply for which contract is signed, and they will be subject to GST. So the contract wherein you're letting somebody do it. We'll give you one more example. Say you booked a flight and you wanted to cancel the flight. It allows you to cancel the flight for a fee. Now that fee will be subject to GST because it is considered to be an ancillary contract to the main contract. Why? Because they are saying that if you're actually having a contract wherein if you're actually having a contract wherein you're booking a flight, the flight company is incurring some expenses. They are allocating a seat for you and they are bringing on board the food for you. So you're actually receiving some kind of an allotment, thereby it will be treated as a service. So they've actually given you a set of activity, what will be service, what will not be a service. Okay, so let's look at that. Check dishonor penalty. Again, this contract is not for you to dishonor the check, so it will not be a supply. Okay, so the contract should allow you to do something. Okay, it should be tolerating. So the check dishonor penalty is not for you to like, okay, you dishonor the check, you pay the penalty, I'm okay. No, the contract says you should not give an invalid check. But if you do that, I'll collect this money. So it is not allowing you to do that, so therefore it will not be taxable. Penalty for violation of law, it will not be taxable because it's like liquidated damages. The contract is not letting you to violate the laws. Are you understanding the differences? But if you look at late fee and surcharge fee and all that, will be taxable as principal supply. So that's the first set of understanding. With that understanding, you will be able to go and answer some questions on that. Now let's look at the second set of amendments which comes in charge chapter. Now first amendment that we have for charge chapter is that in composition levy scheme, okay, so we know that composition levy scheme let manufacturers and traders and restaurants to pay concessional rate of taxes. Okay, so there are certain manufacturers who are not allowed to opt for composition levy scheme. This came in the last examination. November 22 examination was talking about certain amendment that came in person who are not eligible to opt for composition levy scheme. They have asked fly ash bricks and fly ash aggregate, are they allowed to opt for composition levy scheme? And then answer should have been no, they are not allowed. Now in that particular wordings, they had like n number of people who are not eligible. Now what are the people who are not eligible? First set of people who are not eligible was PTI, pan masala, tobacco and ice cream. Second set is aerated waters, manufacturer of aerated waters. And the third set was 4 set of bricks and blocks. These manufacturers was also not eligible. In this particular wording itself, they had given for the last examination, somebody who is manufacturing fly ash aggregate with 90% or more fly ash. Now this is removed. Any fly ash aggregate, if you are manufacturing, you are not eligible for CLS. Now there is a change that happened in RCM. Okay, so the first change was the change in wordings for GTA, but that is not going to have any impact. GTA, how the RCM will work now? If the GTA is the supplier, goods transportation agency, who are not opting for forward charge, if they make supply to a specified category of person, it will be taxed under reverse charge mechanism. Now that remains the same. Okay, only the thing, the wordings has been changed. Earlier that percentage was given, now they said people who are paying taxes under forward charge, for them it will not be taxed under reverse charge. So the wordings alone has changed. Now there's a new RCM introduced which is very likely that will be appearing in your examination. So I'm just giving this 5 star because I'm expecting this actually could be there in your examination. What is this additional RCM that is introduced? Any person, the supplier can be any person. What are they doing? They are renting residential dwelling. To whom? To any registered person. Okay, to give you an example, okay, so my CA firm is registered. Okay, my CA firm is registered. Now LDS and company is my CA firm's name, it is registered. Now LDS and company decides for the partner Lijil Lakshman, LDS and company will start paying the rent for me. So tomorrow onwards, my rent is going to be paid by LDS and Co. What kind of rent am I paying? Rent for a residential dwelling, a residential house. I'm staying on rent. That rent is going to be paid by my CA firm, which is a registered person. Now, if I pay the rent, residential dwelling is rented to me, who is not having a GST number, then will that be subject to GST? Will that be subject to GST? No, it is exempt. Okay, renting of residential property for residential purposes, exempt. But the same residential property, now if it is rented to a registered person, it is liable to pay taxes and it will be taxed under reverse charge. So corresponding amendments is also made. Consequently, amendment is brought in exemption notification that renting of residential dwelling is now exempted only when it is rented to a person other than registered person. So whenever you have residential property given on rent to a registered person, it will become taxable and the registered person will have to pay tax under reverse charge mechanism. That's the change. Next, what's a change that has happened in ITC which will be applicable for your examination? There are multiple changes that will be applicable which is important for you to note for your exam. First one, Section 16. What is Section 16 talking about? What is Section 16? It is talking about conditions for availing ITC. In Section 16, we have Section 16 subsection 2 clause AA was added, and it says what? For you to now take credit, you have to have an additional condition satisfied. Otherwise, you have 4 conditions to be satisfied. What were the 4 conditions? Number 1, you should be in possession of an invoice. You should have an invoice with you. Second, you should have received goods or service. Number 3, tax should have been paid to the government either by cash or utilization of credit. Number 4, you should file GSTR 3B or return under Section 39. Now the 5th condition says that if you want to take the credit, the supplier has to upload the invoice in his GSTR 1 and it should be communicated to you in your GSTR 2B. So look at the screen and then read it. Details of such invoices, the first additional condition is details of invoice or debit note should be furnished by supplier in GSTR 1 or IFF, invoice furnishing facility, and same should have been communicated to registered person in GSTR 2B. This is the additional condition that is given. If you look at last attempt or last to last attempt and previous attempts and all that, this provision was differently placed. Like there was a time when 20% extra credit was allowed even if that is not uploaded. There was a time that is reduced to 10%. There was a time that is reduced to 5%. I'm telling this for people who have been giving multiple attempts. The change was like that. Now you can take credit only if your supplier is uploading it in his GSTR 1 or IFF and it is given to you in a 2B. The additional condition is that even after it is uploaded, now government has power to restrict it. So they're saying that if you want to take the credit, now government should not be restricting that credit, then only that credit will be available to you. So if you look at, there is an additional condition 16(2)(BA which says such ITC communicated under Section 38 has not been restricted. Next, 16(4) time limit is updated, which is a very important amendment again. They can actually frame a question in the workouts and all. We have done multiple questions on this, so I'll recommend if you have time tomorrow, you go and look at the questions as well on this. Time limit for claiming ITC. For an invoice or a debit note pertaining to a financial year, ITC can be claimed on or before earliest of the following date. What is the step in which you can compute this? When can I claim ITC? Not utilize ITC, claim ITC. When can I claim ITC? Said for any invoice or even debit note. So you look at what is the invoice date or you look at what is the debit note date. Okay. And the last date in which you can take ITC on this invoice or debit note would be earliest of the following dates. Earlier, this part that you can see here as 30th November, that was not 30th November. For the till the last examination, it was 20th of October, like the due date of filing return for September next financial year. That is now amended, and they said 30th November next financial year or date of filing annual return, whichever is earlier, would be the last date. Now the maximum you can take only date of filing annual return if the annual return was filed before 30th November. And practically it's not going to be possible to file annual return that early. So generally the maximum time in which you can take ITC would be 30th of November next financial year. So the same set of amendment has been made in two more places. Same amendment, this 30th November has been inserted in two more places. Which are those two more places? One is the same time limit is applicable for credit note. The time limit for availing credit note or adjusting the credit note in the return would be the same as 30th November next financial year or date of filing annual return. Second, for you to make rectification, you uploaded something in your returns for a financial year and you want to amend that. You want to update something in a return. You can do rectification on or before 30th November or date of filing annual return. So remember, three time limits are same. One is time limit for claiming ITC, credit note time limit, rectification time limit. Any one can be asked as a question. Now there is one more clarification that is given which can also be thought through. If the examiner is good, they can frame a question on that as well. For this purpose, financial year relevant for claiming ITC on debit note will be the financial year to which debit note belongs to, not original invoice. When you are taking ITC on a debit note, please take debit note date. Find out debit note financial year. Take the next financial year 30th November and annual return date, not the financial year of your original invoice. Please remember that. Next, in case of registration, you have the same amendments for registration for following goods. The threshold limit that is applicable for registration is 20 lakhs. Now, if you look at registration, it's best that you look at the registration threshold limit at once. Okay. So let's go ahead and then look at threshold limit in one go, so that is there in your mind without you losing the understanding of threshold limits. In case of registration, how do you make the decision? Your threshold limit, your registration has three sections for you, directly. Which are the sections? Section 22, which talks about threshold limit. Section 23, which talks about person not liable for registration. Section 24 talks about compulsory registration. You have 8 set of people compulsorily will have to register. The first point of compulsory registration is that if you are making interstate supply between the states, you will have to take compulsory registration. But that compulsory registration will not be applicable if you are making interstate supply of service only. Also, if you are making interstate supply of goods, but what kind of goods? Notified or handicraft goods, you get threshold limit. In all other cases, interstate, if you're supplying interstate goods other than handicraft and notified goods, you will have to take mandatory registration under section 24. Now, if you coming back to the intrastate supply, so this is under page number, you can go to the last page of your registration chapter. You will find this in the last page of your, not registration chapter, first chapter in your chart notes in the first chapter, point number 10. Okay. Now, if you are only making intrastate supply within the state, be it any state, if you are making only intrastate supply, your basis would be aggregate turnover, and you will have to register only if your aggregate turnover exceeds the threshold limit. For the purpose of threshold limit, we are dividing the states into 3 categories. Smallest states with 10 lakhs of aggregate turnover threshold limit. Okay, smallest state with 10 lakhs of aggregate turnover threshold limits is TNM2. What are the expansion for TNM2? That's the code word for understanding those states. Tripura, Nagaland, Manipur, Mizoram. 10 lakhs is the limit. The medium category states limit is 20 lakhs is Saptam. Sikkim, Arunachal Pradesh, Puducherry, Telangana, Uttarakhand and Meghalaya. All other states the limit would be will be in common, which called as general category states. Now in that we have, if you are supplying service or goods and service, your limit will be again 20 lakhs. If you are supplying goods like PTI, bricks and blocks, like the four set of fly ash bricks, bricks of fossil meals, building bricks, earthen and roofing tiles, the limit even in general category states happen to be 20 lakhs. All other goods other than PTI and these four goods, the limit is 40 lakhs. This is the understanding that we have for registration. Okay, please note. And I have given a specific note here. If a person has more than one branch, one in a lower limit state, another one in a higher limit state, lower limit will be applicable. Think, if I have one branch in Tripura, one branch in Delhi, I will have the limit of Tripura applicable provided lower limit state, provided he is making taxable supply from lower limit state. In Tripura I don't make taxable supply, then I will not have that limit applicable. Alright, okay. Now coming back to the amendment part. Okay, so let's look at cancellation. This is where you have a lots of amendments that is applicable. Okay, so there's one amendment that came in, revocation. So revocation is super important for this exam. Okay, I told you in multiple locations that revocation is where they can ask you a full length question. So we'll have to look at that in one go. Okay, but let me give you an understanding on the overall cancellation provision, where it says your registration is liable to be cancelled if you don't file returns. And what is that category of returns? Now the period in which your registration can be cancelled by the officer. So when the officer is cancelling, we will call that cancellation of GST number as suo motu cancellation. There are two types of cancellation. One is cancellation by the officer, another one is voluntary cancellation by the registered person. If I don't file return for a specific period, like say if you are a composition levy scheme person, if you don't file GSTR 4 within 3 months from end of financial year. So normally GSTR 4 needs to be filed within 30 days from the end of financial year, which means in a financial year, say 2022-23, GSTR 4 needs to be filed on or before 30th April. But if I don't, 30th April got over, 31st May got over, 30th June got over, that is 3 months is over from the end of the financial year. Now the officer can cancel your registration. Now other than composition levy scheme, if you are under QRMP, if you don't file 3B for 2 continuous quarters, and if you are under normal scheme, which means you are not under QRMP, monthly filing, if you don't file continuously 3B for 6 months, 6 months is 2 quarters, same. See, understand? It's the same thing. Then your registration is subject to suo motu cancellation. The officer wants, they can do that. Okay. So there's one more provision they have added as a note here. So carefully, slowly, let's read the note. In the above case, if all pending returns are submitted before cancellation order, but after suspension, then suspension is deemed to be revoked. Say one fellow did not file continuous 6 months GSTR 3B. Now the officer sent him a notice and suspended his registration. But the moment he received the notice, this fellow went and filed all the returns. Now the suspension is withdrawn. Automatically, there is no cancellation that will happen. That's the understanding. Coming back to invoices. What is the amendment that we have in invoice chapter? We'll look at. We have an amendment on e-invoicing. A lot of students, what happens is that by the time they read this theory based end of chapters like procedure chapter, they lose all the vigor. Like it happens like diminishing marginal utility, they end up not reading e-invoices. But to be honest with you guys, if you look at last 3 examination, there is question on e-invoicing, every examination. And even for the, so then your next question would be, okay, so that means that the next examination there won't be any invoicing question. There can be, because there's one more amendment that is applicable specifically for my exam. What is it? They have reduced the e-invoicing applicability limit. There are 2 points that we will have to remember about e-invoicing limit here. So what is e-invoicing? Is it same as e-waybill? No. E-invoicing is nothing but uploading invoice to invoice registration portal and getting an invoice reference number back to your invoices. So you upload your invoices to an IRP and you're getting an IRN into your invoices. So that will be as a QR code and there will be a number called as IRN in your invoices. This is applicable for what supply? B2C or B2B? It is applicable to B2B supply because this is used for the recipient to claim ITC easily. So the recipient wants to take input tax credit and this particular process of uploading and getting an IRN will automatically push the invoices to the recipient and it will sit in their 2B. So the whole purpose of e-invoicing is to easily move the credit. So it will be applicable. Who will get the credit? What kind of transaction will have the credit? Only B2B transactions. So we should remember invoice B2B. Now the limit applicable for people who are supposed to upload and take an invoice IRN before giving it to the recipient was people who had aggregate turnover more than 20 crore from 17-18 any financial year. Now that is reduced to 10 crore now. Now what's the limit now? 10 crore. Okay, so the limit is now reduced to 10 crore. That is the first understanding that will be applicable for you. So anybody other than those people who are not who are exempted from taking e-invoices, all others will have to take e-invoices if their aggregate turnover exceeds 10 crore from any 17-18 financial year onwards, any financial year. So if somebody who is having 12 crore turnover in 2021 and all other years 5 crore turnover, they'll still have to do in this year e-invoices because 1 year they have exceeded the limit. That's enough. Now there are people who are exempted and we had a code word to understand who are the people who need not do e-invoices irrespective of their turnover. Passenger transportation service, cinematographic film, PC Gibbs was the code word. Passenger transportation, cinematographic film, multiplexes. G, 3 people in G, GTA, government, local authority. I stands for insurance, B for banking, S for SEZ. Okay. Now, if there is e-invoices, there is no need to carry physical invoices for movement of goods. It's an additional procedural relaxation that is given. If you have an e-invoice, it's already uploaded, it's already with the government. Why would you carry all the physical document? Is that clear to all of you? Very important area because there is again an amendment. Now, three provisions came in GST together. E-invoices or together or similar time period. E-invoices, QRMP and dynamic QR code. QRMP was fully tested once. E-invoices tested multiple times. Dynamic QR code is not. Dynamic QR code is a simple provision. What it says? Give QR code. But for what supply? B2C supply. Should everybody do it? No. If your turnover exceeds 500 crores, from which year? Last year? No. Any financial year from 17-18, if it exceeds 500 crores, then you go ahead and then do dynamic QR code. Now, there are certain people like United Nations and organizations of United Nations, embassies, etc., who wants to take ITC refund when they make purchases within India. They will obtain a special number called as unique identity number, or we call it as UIN. So if a person whose turnover exceeds 500 crore, they supply to a person having UIN, then also dynamic QR code will be required, because person having UIN is not a B2B supply, it's considered as a B2C supply, because dynamic QR code can be associated with B2C, e-invoice can be associated with B2B. Now, they also relaxed said that unique order ID, sales reference number can be provided on the QR code. if it is generated before an invoice. And what if you received part payment and and you need to generate a QR code in your invoice to make the payment? You will make the QR code only for the part amount which is yet to be received. I've already told you time limit for credit note declaring is also same as 16 for time limit, 30th November, annual return whichever is earlier. Now there are procedural change in payment chapter which we will have to look at. First, section 49, this was tested last time and this is again amended, so can be tested again. Was tested in the last examination as a 2-mark question. What was it? What if I make payment in one of the minor heads? Can I adjust it with another minor head? Can I adjust it with another major head? Yes, you can do that. PMTC Rona, and there's a form that you upload and then you transfer from one head to another. The same is taken one more step now. What is that one more step? Section 49 is amended and said the amount available in CGST head of a person can be transferred to IGST, SGST, UTGST, cess of him. This is something that we already understand. Reason? One major head to another major head is now can be transferred. Now the question, what if in my PAN I have 2 registrations? Can I transfer from one registration whatever is there in electronic cash ledger? I'm not talking about credit, I'm talking about cash ledger. What if I have some extra amount in one registration cash ledger? Can I transfer to my own another registration cash ledger? They said yes, but central government to central government, which means CGST amount in your Kerala registration can be transferred to CGST or SGST of electronic cash ledger in your Karnataka registration. Example, Mr. Raju having 2 registration can now transfer GST in electronic cash ledger of one registration to CGST, IGST of another registration. Another important point that we have now is the change in interest on delayed payment of taxes. Fortunately or unfortunately, this is also not yet tested to that extent. It requires to be tested. If I am the examiner, I am asking this in the next examination. That's kind of an area for me. Okay. Am I the examiner? Who knows? Okay. So let's look at this with an understanding. Okay. What is the provision that we have for interest on delayed payment of taxes? Section 50 talks about interest. And what's the general interest rate for delayed payment of taxes in GST? 18%. All if you remember, it's 18%. Any interest question? 18%. From what date? What's the due date? What's the actual date of payment? So due date is 20th, actual date of payment is 25th. 5 days I will pay interest at 18%. How do I compute? Tax computation, multiply with 18% into 5 divided by 365. This is the computation. Now what's the points that you need to understand here? Now look at the screen and then try to read it with me. Generally, what is the interest that is applicable? It is 18% per annum, right? It's 18% per annum. Now you have to ask the question whether return is filed on time. If the return is not filed on time, which means that you are delaying the whole net GST to be paid. So you pay interest on net GST only. So you delayed the 3B filing, which means you have not paid any GST. So the net GST is delayed. You pay interest on 18% on the net GST. From what date? Due date of filing, actual date of filing. What if you filed 3B on time, but you forgot to declare one invoice? Then you will have to pay interest on the exact that invoice. What was the GST payable? So it means that if you delay the whole 3B, then means you are paying interest on the tax to be paid by debiting electronic cash ledger, or we call it as net liability. But if you file 3B on time but missed out an invoice, then you pay interest on the tax payable on the on that invoice, which means gross liability on that invoice. From what date to what date? What is the date you should have paid the taxes? To the what date in which you have actually paid the taxes. So this is the difference. If you delay the 3B, net liability. If you don't delay the 3B, but you missed out an invoice, gross liability. Now what is additional? They said if you have wrongly availed and utilized credit, now you will have to pay interest, and interest can be as high as 24%. But currently, what is the notified rate? Again 18%. So in GST today we have only one rate of interest, which is 18%. We have a notified rate 18%. It can go up to 24%, but right now 18%, even if you wrongly avail ITC. This is an amendment. Earlier this section 53 was non-operational, now it is operational. That's the difference. Okay. So all interest rate 18%. Now how do you say ITC wrongly availed and utilized? Say I purchased a motor vehicle like a Swift car. I purchased a Swift car. I paid GST of 1 lakh. Can I take ITC or I cannot take ITC? What's your answer on? Can I have it on the chat box? Can I take ITC or I cannot take ITC? You cannot take ITC because it's a blocked credit, right? But I took ITC. I utilized. Now I have to reverse together with 18% interest. Now I have credit after, see, my wrongly availed credit is 1 lakh. After utilizing the credit for this month, I have 50,000 left in my 50,000 is left in my electronic credit ledger, which means how much I have wrongly utilized? Only 50,000. So I have to pay interest only on 50,000. Okay. So how do you say that? It says you assume that you have utilized a credit. You assume that you utilized a credit if your electronic credit ledger balance is lower than whatever wrong credit you have claimed. I have wrong credit I have claimed is 1 lakh. My balance is 50,000, which means my wrongly claimed credit is 50,000. This is also important for you. Now these are all things that they have tested before but got an amendment now. How do you utilize credit now? Okay, this they can frame 2-mark question on this. So I will call this also as an important area. They can test the regular question. They can even test you with some amendments here. How do you utilize credit? Can I utilize electronic cash ledger to pay anything? Yes. So you look at the second branch here. Electronic cash ledger can be utilized against making any payment towards tax, interest, penalty, fees or any other payment. No problem. But electronic credit ledger, it can be utilized against output tax liability or output tax liability by a proceeding under GST law. What means? They said credit ledger can be utilized only to pay tax, but the tax payment can be tax on a particular month, or they have sent you a notice saying that you have to pay so much of taxes. Any tax payable due to proceedings or any output tax liability, any taxes. But can you utilize electronic credit ledger to make tax payment under RCM? No. That's why they have written other than tax payable under RCM. Let's read it. Electronic credit ledger can be utilized against any output tax liability, including any tax payable due to proceeding under GST law other than tax payable under RCM. Second branch says it cannot be utilized for making any other payment like interest, late fee, penalty, etc. So please remember this, you cannot use ITC to make payment of interest, late fee, penalty, only cash. But any taxes except RCM taxes can be utilized by ITC. Return chapter, let's look at what is the amendment we have. A registered person is debarred from furnishing details of outward supplies in GSTR 1 if you have not furnished 3B for the previous month, if you are under QRMP, if you have not furnished 3B for the previous tax period. Means what? You will not be allowed to upload GSTR 1 or IFF and allow your customer to take the credit. In B2B, your customer wants credit. So your customer will pressurize you to upload items in GSTR 1 or IFF. If you want to do that, for January invoices, if you want to upload, you have to ensure that, so when will you upload? On or before 13th of or 11th of February, right? So you'll have to ensure December 3B is filed by you or December quarter 3B is filed. So if your last 3B filed means you have paid taxes for the last month. Only if you have paid taxes for the last month, you will be allowed to do uploading of invoices. For whom? Supplier. you will be allowed to upload only. That facility will be open only if you have done 3B for the last month or quarter. A GST practitioner is only allowed to furnish details of outward supplies, not inward supplies on behalf of a registered person. There's an additional criteria that is given. Now, what is the time limit for rectification of errors? Same as your 16 for 30th November, which replaces the 20th of October. 30th November or annual return, whichever is earlier. Now, the most important amendment happened in this particular chapter, exemption, 22 amendments if I am not wrong in terms of numbers, but very easy to look at. Okay, so I will quickly breeze through each of the amendment and then our amendment discussion would be over, which is paramount important for us for day after tomorrow examination. First amendment that we have is, earlier Department of Post had, what was the exemption that is available to Department of Post? Except seal services. Now this wording is reframed. What is it? Now they said Department of Post services are exempt only if it is BIPO. Earlier everything is exempt, seal is taxable. Now seal is taxable, also other things are taxable except BIPO. What is BIPO? Book post. B for book post, I for inland letter, book post, inland letter, that small inland letter. Postcard, when you used to give postcard for Christmas, that postcard. Ordinary post less than 10 grams. BIPO. O is ordinary post less than 10 grams. Only these are exempt. All other things are taxable. What is additionally taxable now? Money order, pay order, everything is taxable. Seal services, yes. Apart from that, money order, pay order and all is now taxable. Registered post, taxable. Now, transportation of passengers by flight had an exemption if it is Northeast and Bagdogra. Now, that exemption is now limited to economy class. Earlier, that exemption was applicable even for business class tickets. Now, business class ticket to Northeast and Bagdogra is now taxable. In case of transportation of goods, railway and vessel, if you transport railway equipments or materials, used to be exempted. Now, that is withdrawn and it is taxable. Similarly, GTA had an exemption called as small consignment exemption, small consignee exemption, which means if the consignment is less than or equal to 1500, less than or equal to 750, there was an exemption that is withdrawn, now it is taxable. Warehousing. Now, there was a list of items warehousing that was exempted. Now, warehousing overall structure is this, and this is asked in multiple examination. If you have a case study question, they can ask in MCQ. Warehousing of only 7 type of goods are now exempted. One is agriculture produce, warehousing is exempt. Rice, pulses, cereal, fruits, vegetable and minor forest produce. So, what warehousing is now taxable? Tea, coffee, jaggery, all of that warehousing is now taxable. Railway and vessel and GTA will have exemption if they are transporting certain goods, and that code word is random. Relief material, agriculture produce, newspapers and magazines, defense and military equipments, organic manure, milk, salt, food grain, including pulse and rices. So, this is the set of goods. Railway, vessel and GTA, these are exempted. All other exemption is gone. Now, fumigation in warehouse of agriculture produce was exempted. Fumigation is pest control, now it is taxable. In healthcare services, renting of room in a hospital was fully exempted irrespective of the limit. Now, that is changed. They said if the room rent is per day less than or equal to 5,000, it is exempt. However, if the room rent is more than 5,000, if it is ICU, CCU, ICCU, NICU, it is still exempt. Similarly, preservation of stem cell by code blood bank was exempted. Now it is taxable. Please remember, all your previous examination questions would now change and have a different answer. Preservation of stem cell in a code blood bank is now taxable. Similarly, if a company provides biomedical waste treatment plant, that is now taxable to a hospital. Okay. Now, recreational training is reframed. They said if there is a recreational training like fun training given, In arts or culture like dancing, some kind of painting, etc., if the coach is an individual, it is exempt. If it's a sports training for recreational fun purpose, not certificate training, it is exempt if it's provided by a charitable entity, 12AA or 12AB entity. There's an additional exemption that is given if there is a tour operator. Okay, where is this tour operator located? In India. So assume Club Mahindra. They are arranging a tour for whom? A foreign tourist, Barack Obama. So Club Mahindra is giving a tour for Barack Obama. Now the supplier is in India. Barack Obama is given a bill of 2 lakh rupees. Where is Barack Obama going for tour? Partially in India, partially in Nepal. Now which will they get exemption? For the Nepal amount, you will get exemption. Okay, so there's some question on the chat box that I can see. Is there any 1000 beds in exemption of 1000 beds in hospital? No, there's nothing like that. The 1000 rupees per day was for hotel. That is also now withdrawn. Hotel is fully taxable now. Now, Barack Obama is having 2 lakh rupees paid to and Club Mahindra for India and Nepal tour. Now, look at number of days he spent in Nepal and give exemption. Now, how do you compute that? Total package value 2 lakh. 5 days in Nepal, 5 days in India. So 5 divided by 10, so 1 lakh will be exempted or 50% of package, whichever is lower. So he spends 2 days in Nepal, 8 days in India. So 20,000, 2 lakh into 2 divided by 10, that is 40,000 will be exempt. Now he spends 9 days in Nepal, 1 day in India. How much will be exempt? 9 divided by 10, which is 90%, 1,80,000 or 50%. What is the exemption? 1 lakh. So they said whatever time you spend proportionately or 50% of package, that will be the exemption, rest will be taxable. And if you spend more than 12 hours in one country, that will be treated as 1 day. Less than 12 hours will be half day. Giving national permit to goods carriage to operate throughout India or contiguous states is now exempted. So NP lorry permit is exempt. Services by hotel, inn, guest house, club or campsite is now taxable without any limit. Earlier, 1000 rupees room rent was exempted. That room rent is now removed and it is now taxable. Biomedical facility to clinical establishment means both hospitals and clinics. Yes. Earlier also exemption was only given to hospitals, clinical establishments. Okay, so clinical establishment can be hospitals or clinics. Both of those exemptions are withdrawn. Now it is taxable. Now, services by RBI is now taxable. So means what is the understanding of RBI now? Services provided by RBI to banks is taxable. Service received by RBI is also taxable. Now, service received by RBI from an overseeing committee member, it is taxable, but taxable under RCM. Repeat again, RBI to anybody, now taxable. RBI to banks used to be exempted, now it is taxable. Anybody to RBI, taxable. Overseeing committee member who is appointed as like an independent director of RBI, taxable, but RBI will have to pay tax under reverse charge. Services by following organizations are now taxable. SEBI and IRDA exemption is withdrawn. Whatever service provided by SEBI and IRDA are now taxable. Similarly, Indian Railway Finance Corporation, it's an old amendment. Indian Railway Finance Corporation is giving coaches, wagons, etc. on lease to Indian Railway. It is now taxable. Okay. Food and safety licensing requires different charges. This is now taxable. Earlier it was exempted. Now, even when GST network, the Section 8 company of GST, they provide services to state governments and central government. Now that is taxable. Each state government will get GST network bill on a monthly basis together with GST. Slaughtering of animals is also now taxable. Now there is clarificatory circulars for that as well, which is also important, can be tested. Number 1, Anganwadis are getting midday meal system funded by grants or corporate donations. Okay, so they said Anganwadis will be treated as a preschool. So catering to preschool is exempted. So Anganwadis, if they get catering services for food to those kids who are there in Anganwadis, that will also be exempted. So catering to Anganwadi is exempt. So suppose there is construction of roads and the payment to the contractor who's constructing is paid on an annual basis, like an annuity. But it is not toll, it's construction consideration, so that will be taxable. Only toll charges are exempt, not the deferred payment for construction. Now there is services provided by National Board of Examination. National Board of Examination does DNB examination. For doctors, they have entrance exam. So they do that. They give affiliations and certification to medical colleges who can train DNB doctors. So first question that we had in clarification is this National Board of Examination an educational institution? Yes. So their services by way of conducting DNB entrance exam or FNB entrance exam will be exempted, because entrance examination conducted by second category of education institution is exempt. What if they take services relating to conducting examination? Since National Board of Examination is treated as a education institution, there are 3 education institutions under GST will get exemption: schools, universities and vocational training institutions. This will be like the second category, universities. So anybody provides services to these 3 category education institution relating to conduct of examination, that is exempt. So if an auditorium provides services or a printer provides services to National Board of Examination is also exempt. But any money collected from DNB doctors as membership or from a college for accreditation, those will be taxable. This is the clarification. Now, state government giving guarantee on loans taken by state government's undertakings will be exempted. Coaching institutions providing training for students with disabilities where at least 75% of expenses borne by government is also exempt. This was there in the last examination as a question. So chances of this being tested is less, but it's ICAI. Next, what about overloading charges and what about additional fee paid for not having FASTag in toll? So some vehicles have to pay extra toll, that is toll only exempted. My FASTag is not having balance, so I paid double the toll, that is also toll only, still exempted. If you're giving vehicle on hire, there are clarification on exemption. If I give a motor vehicle more than 12 passengers to state transport undertaking like KSRTC, it will be exempted. Like if I'm giving a bus to KSRTC, it's exempted. If I'm giving an electric vehicle more than 12 passengers to a local authority, Kochi municipality, that will also be exempted. Say if you go to an institution, your education institution, and you take you pay an entrance fee, or you take an eligibility certificate, migration certificate, all of this will be exempt. And they said, hiring vehicle with driver. Say if there is mining happening, there will be a lot of lorries that is on the mining, the pit head, like where the mining starts, like on the top of the mining area. There will be a lot of vehicle waiting, can be used by the person who is doing the mining. And these vehicles will be taking those minerals to the railway siding or wherever the transportation happens. So they have clarified these are not transportation of goods service, it is rather renting of vehicle with operator, so this will be taxable. So mining, from mining pit head to railway siding is taxable, that you should remember. Honorarium paid to guest anchor will be taxable provided their turnover is more than the threshold limit, it's not an employment. ART IVF treatment for children to have child, infertility treatments, these are healthcare services exempted. They said land after you level or you do drainage is still land only, thereby it's not a supply. Sale of land is a schedule 3 item. Stamp duty is applicable, not GST. Activity of leveling the land is a service. Say I am saying that if you have a land, I'll do the leveling for 1 lakh. That is actually a supply of service. Now, hiring of vehicle by a firm for transportation of their employees to and from work. say it says that if you are giving a vehicle on rent to pick up and say for example to do the pickup and drop of an employee of a company, would that activity be treated as transportation of passengers or renting of motor vehicle? They said if it's predetermined schedule, predetermined route, it will be transportation of passenger. If it's a non-air conditioned contract carriage, it's exempted. But if it's not predetermined route, so if the employer will decide where to take and all that, it will be renting of motor vehicle, there will not be any exemption. They said transportation of passenger, there is an exemption available if you do transportation of passengers in vessel between places in India. So there are two type of transportation of passengers through water can happen. One is inland waterways, another one is coastal waterways. What is inland waterways? Within the country, inland waterways like river, backwaters. Coastal waterways means using sea water. But if you are in Andaman Nicobar Dweeps, from one island to another island, it will be coastal water I am using, right? So they said public transport in coastal waters between places in India is also exempt. But they said when I say public transport, it's like line buses, like private line buses. It's open to public. That is enough. Can be owned by a private party. So they said private ferry ticket for transportation of passengers is also exempted. Public transport means open to public, can be owned by private party as well. So this is the exemption that we had, and we have completed the discussion on amendments. And this is very important for your examination. Ensure that you have a quick glance at all the amendments, if you have any clarification that is required. Okay, so now we will take a quick 10 minutes break. So probably you guys wanted to just refresh and then get your energy back, have something, and then come back. We will start with the next set of discussion. I'm going to start with valuation chapter. Half an hour entire discussion on valuation chapter will give you examination tips. Welcome back, everyone. Can someone confirm me on the audio and video once again so that we can start with our discussion? So we'll start with value of supply chapter so that you're done with that area where they have questions asked on computation of value. Last examination they did not ask that value specific question, but till then all the examination had that value specific question. They'll ask you to compute value from a set of details. So you'll have to write in working notes a set of details in that as well. So we will look at that kind of question. I'm expecting since they did not ask in the last exam, this exam they'll reintroduce again a value based question. So we can look at that structure. Meanwhile, I'm expecting some of you to confirm me on my audio and video, so the YouTube is clear to all of you so that I can start without any further delay. Okay, so I have confirmation. Let's get started with it, guys. So value of supply chapter is very important for your examination. There's one type of question that they'll ask you. So it's best for me to show you some questions than looking at this without any structure. So how the questions of valuation chapter would be looking like. A value question would be very simple, straightforward question. They'll have a set of value to be computed. Okay. So the computation question looks like this. It talks you what is to compute the taxable value of supply. The question looks like this. Compute taxable value of supply, and then they'll give you an information like they have so many items, price of the goods will be there. Apart from price of the goods, from the customer, they'll collect so many other payments, right? So they'll collect some other payments and they'll ask you like compute what will be the taxable value of supply. So you have to decide whether some items to be included or not to be included in the value, and that will be the decision making that you have to do. If you include and not include, you will have to give remarks. Either you can give the remarks in the method in which you can answer this. You can either give answer like this, wherein you can give answers wherein you can actually show them what is the value. You do a table like this. You computation of taxable value of supply by a company for so and so month, and then you will write the price of the machinery, inspection charges, that charge, this charge, discount, all that you write, and then you will write a working note reference and you write working notes. This is one method. The last suggested answer, if you look at, you will find a different method. What is a different method? They are giving remarks at the end of this. They're doing like particulars, amount and remarks column there. But I'll still suggest for an easiness or to ensure that your answers are correct and you don't have any, your presentation is good. It's always better that when you write it as a separate working notes, because otherwise your space planning will become a flop. Okay, so let's do it in this format itself. Let's look at what are the items to be included, what are the items not to be included. In an examination question, they'll generally give you something called as transaction value. Like they'll give you price of the machinery. This is what they're collecting as a price and all that. They use the word price. Whenever they use the word price, it means transaction value under section 15.1. So value is nothing but transaction value under section 15.1 plus there is a set of items to be included and excluded. Then you can, whatever discount is genuine, you can reduce it. So what is transaction value? It is nothing but price paid or payable for the supply. Whatever is paid or payable. But whatever you don't pay, like say in an examination question, they're saying that I'm waiving some amount. There's an interest payable, but I'm waiving that. The supplier says that no need to pay. Those amount need not to be added to the value. So look at the note here. Notional amount which are waived and not payable need not to be added to the value. Say Mr. X is a supplier and he is saying that there's an additional charge of 500 which is generally collected on the extra packing, but Mr. X is a very good guy, he waived that amount. Should I include this 500? No need to include, but do you write a working note? 15.1 says that whatever is not collected, not payable, not included. Now 15 subsection 2, there are 5 clauses which says what are the items not, if not already included, you have to include these items. In that, clause A, taxes, duties, cess, fees and charges levied under any law other than GST if charged separately by supplier from recipient should be added to the value. Example, municipal taxes. If you look at tobacco, there is excise duty. If you look at movie tickets, there is entertainment taxes. All these are taxes apart from GST that I will collect. So what they are saying, you add all these taxes into the value and then compute GST. Next, there is a circular clarification which says that TCS under Income Tax Act will not be added to the value because it is not the tax on that particular goods or services. To give you an example, if you purchase a motor car for more than 10 lakh rupees, you will have to collect, if you are a dealer, you will collect extra 1% TCS and then deposit in the name of the buyer with the income tax department. This TCS has no connection with, it has no connection or it has no impact with the motor vehicle like the car. So thereby it will not be added to the value for the purpose of GST. This is not yet tested, surprisingly not yet tested, even though there are so many questions on valuation that is being tested. So TCS can be there in your examination probably for your next exam, you never know. So don't include TCS under Income Tax Act. Please remember these boxes, register this box in your Monday, like in your head. Second, direct third party payment by recipient on behalf of supplier in relation to supply should be added to the value. Say if there is a payment that is made by customer to a third party and that payment should have been made by the supplier, then that payment will be like whatever is paid by customer to the third party will be added back to the value is what the understanding is. Generally a lot of payment can be structured like this. Say there is a testing to be done on my, say this water bottle, before I sell I have to test it. So testing cost me 10 rupees and I tell my customer you pay directly to that testing agency. Is that 10 rupees to be added to this value? Yes, because that's a direct third party payment made by customer to a third party and that is in relation to supply. I should have paid on behalf of me, that payment was made. Then part C is very common discussion in this particular area. So let's look at what is clause C talks about. And you should also be remembering these words, okay, that's important. Incidental expenses incurred by the supplier in relation to supply. So any expenses incurred by supplier in relation to supply till the goods are ready for delivery or supply of service and you collect it from the customer, you charged by the supplier to recipient will be added to the value. Example can be commission, like all these examples come in the examination. Sales commission, packing. So what they basically do is they collect this amount from the customer. So they even call it warranty and extended warranty, all this to be added. So apart from the transaction value, collecting all this amount should also be added to the value under 15(2)(c). Then D talks about interest, late fee, penalty. So if there is a delayed payment of consideration, so I tell my customer you pay me after 1 month, you pay me with interest. That interest should be added to the value. Now when you are adding such interest, you have 2 notes that I have given you, which is very important for you to look at. Okay. Note number 1, this interest is one discussion that can be tested in any exam. There are so many areas where we are discussing interest, with respect to GST. We'll look at each of those areas in terms of revision. First, note number 1, such interest, late fee, penalty will have a separate time of supply. Normally we have a provision in which we will compute time of supply, right? Now when it comes to interest, late fee, penalty, you will have to have a separate time of supply. Means what? It means that if say I sold my goods in the month of February, okay, my time of supply is also February. But if the payment is not made within April if I am charging interest. So in June I am collecting interest of 10,000 rupees extra. Now I cannot have this 10,000 rupees interest having a time of supply of February. It will be only June. Okay, so they said for an interest late fee penalty, the time of supply would be the date of payment of such interest late fee penalty. Okay, not the original one. So it's a separate time of supply provision. Then, whenever you receive interest late fee penalty, in all cases, assume this. In all cases, assume this. What is the cases that you will assume this? Say, it is generally assumed that such interest late fee penalty are inclusive of GST. It will be inclusive of GST. Means what? Say, I'm getting 10,000 rupees interest. So we'll assume that this 10,000 is subject to GST first of all. Second, this is including GST. So wherever they have not said it is not inclusive, you will have to always make this assumption and then write this assumption in the working notes. Okay. So how do you compute? If 10,000 interest is collected, what will be the value for the purpose of GST? 10,000 into 100 divided by 100 plus GST rate. If GST rate happened to be 28%, it will be 100 divided by 128. GST rate happened to be 18%, it will be 100 divided by 118. So likewise, you will have to do the computation. Now subsidy, very important, multiple examination. The students got confused in terms of assumption that they have to take for subsidy. Subsidy can be, if you want to, say they're saying the certain subsidy can be reduced from value. Now first of all, what kind of subsidy will be allowed to be reduced from value? Only a subsidy directly linked to the product price. Say subsidy on electric scooters, subsidy on electric vehicles, subsidy on cotton shirts, handicraft shirts. These are all directly linked to the price. But subsidy for setting up a machinery or setting up a factory is not a direct subsidy, it cannot be reduced. Now again, can all subsidy be reduced from value? No, only government subsidy. It can be reduced from value. If it's a non-government subsidy, it cannot be reduced from value. If it's already reduced, it should be added back to the value. This is the provision that they are saying. Now, even if it's a government subsidy, if it's an indirect subsidy like subsidy for setting up plant, need not to be reduced from value. Now, what's the impact of this in terms of understanding? I'll tell you. Okay, look at this. They use certain words in the examination. If they're using the word, the value given is net of subsidy, which means what? The value given in the question is price minus subsidy. So, how do you do the treatment? If it's a government subsidy, you can reduce it. But is the question already reduced it? Yes. So, you can ignore it. If it's a non-government subsidy, can you reduce it? No. Is the question already reduced it? Yes. You have to add it back. If subsidies included in value, the wording that they have used is subsidies included in value means what? The value given in the question is before reducing subsidy. Net of subsidy means value is price minus subsidy. But if the value is, the question says the subsidy is included in value means it's before reducing. So if it's government subsidy, you can reduce it. If it's non-government subsidy, you cannot reduce it. Is it already reduced? No, it is not reduced, so you can ignore it. Then, subsidy not included in value means what? Not included in value means what? It's net of subsidy. Okay. So, same understanding. This can be a bit confusing in terms of words. It's not included means it is net of subsidy. It is already adjusted. They have not included. They have not added. Okay, subsidy is not there. So, which means if it's a government subsidy, it's already netted off, ignore it. If it's a non-government subsidy, you have to add it back. It's little tricky, but this is how ICAI's assumptions are. Okay. Again, I'm doing a live on YouTube. If you have any confusion, this video is going to be there, right? So, you can always go back and then look at this once again, like for 10 minutes, and then you will understand it. Now, what about discounts? Can I reduce discounts from value? Yes, discount can be of two types, clause A and clause B. Clause A discount means discount that is given on or before the time of supply, which means before I give them the invoice, there is a discount that is agreed. I will show this discount in the invoice and I can reduce it from the value. What if the discount is given after the supply? If the discount is given after the supply, which means I've already given the invoice and there was no discount given, but I promised him a discount. He came later, satisfied some condition, I gave him a discount. Can I reduce it from the value? They said yes, that can also be reduced from the value, provided you satisfy 3 conditions. What are those 3 conditions? Number 1, that particular subsidy should be existed at the time of supply as per the agreement. Number 2, it is linked to the relevant invoice. Number 3, ITC on discount is reversed by recipient. Those should have been a discount promised by agreement, existed, and I am able to identify against which invoice this is linked to. So in the examination question, they will give you some understanding on these 2 points. There are 3 conditions, all 3 conditions to be satisfied for you to reduce it from the value. So they'll give you some kind of an understanding where you can actually think, okay, can I reduce it, can I not reduce it? So once you get that idea, then you decide on that and then put a working note. That's how you should do it. With this, there are questions. Now, they have clarified with a circular on sales promotion schemes on how the discount will be treated in GST. So let's look at that circulars. If you look at last examination, most of the question came from circular clarifications. So students found it little difficult for understanding the question because it was a new question. It's not like straightforward GST question. So we cannot expect GST to be as simple as it used to be in the earlier part. So but understanding conceptually is very important for you. Okay. We still have people who are scoring really high in the examination. So how that is possible? Understanding conceptually. So look at, you should definitely look at having some idea on circulars. Okay, so let's look at the circular. Sales promotion scheme talks about discounts. There are 2 types of discount. One is volume based discount. What is the volume based discount am I talking about? Buy more, save more. I buy more, I get more savings. Buy 2, get 20% off. Buy 3, get 30% off. All these discounts are given at the time of supply, shown in an invoice. It can be reduced from value, no problem. Second volume based discount is discount upon achieving volume targets periodically. So at the time you say, for example, a wholesaler and retailer, the wholesaler is telling retailer at the start of the year that, see, if you achieve 10,000 units, I will give you 1% discount. But this discount is realized only after the supply, but promised at the time of the supply. So this discount is called as discount upon achieving volume targets periodically. It's given at the time of supply, so one condition is satisfied. Okay, but it is not given through invoice, it is given through credit note. It is given through credit note. It's a practical case of credit note because this discount is given after the supply. Can I reduce it from value? Provided 2 conditions more are satisfied. Number 1 condition is satisfied, it's existed. Number 2, I should be able to link it to an invoice. Number 3, what is the third condition? ITC should be reversed. So if that is also satisfied, you can reduce it. So that's all the provision says. The clarification says it's generally agreed upfront. It can be reduced only if the other conditions satisfied. But there could be discount called as post supply discount. Like a discount is thought about only after the supply. Like the stock is not sold for a long time, so the wholesaler tells the retailer, I'll give an additional discount. Discount given after the supply. It is not agreed earlier, so it will not be allowed to be reduced. Then our last examination 6-mark question area, which came from Del Credit Agent. Okay. Now Del Credit Agent and EMI circulars are testing the same thing. So Del Credit Agent was tested in the last exam. So let's say EMI can be tested in this exam. We never know. Okay, so let's be sure about that. Del Credit Agent is a computation where they are saying Del Credit Agent is guaranteeing payment to the supplier. So normal agent and Del Credit Agent are different. Okay, we will look at what are the provisions that we have for Del Credit Agent. So it's, for me, it's the best that I discuss this with some examples. It will be difficult for you to understand just by reading it. So it's best for me it's the easiest method of discussion for this would be just show you 2 examples and then close it. Same example that I would have done it in my workout batch. I'm doing it now. So agent discussion is, yes, principal and agent discussion is first done in supply chapter. In supply, in schedule 1, which talks about activities which are supply without consideration, we have an area wherein which is talking about when supplier is an principal or an agent and they make supply of goods to an agent. So supply of goods between principal and agent happens. If the agent is a para 3 agent, then that activity of giving goods to agent can be a supply even without consideration. The next question, how an agent can be a para 3 agent or agent for supply of goods? So there's a circular that came in that chapter which clarified that an agent will be treated as an agent for supply of goods only if the criteria for an agent to be treated as an agent for supply of goods is that the invoice should be issued in the name of an agent. Only if the invoice is issued in the name of the agent will be treated as a para 3 agent. Okay, that's the understanding. And that's very important for us to understand del credit agent. Okay, now let's look at this. Our transaction is Samsung is appointed Mr. Raju as a del credit agent. How Raju will be different compared to a normal agent? A del credit agent take care of the collection of amount or receivable when it is a credit sale, or we can say the del credit agent promises Samsung that whatever may be the situation with the customer, I will give you the money. The risk of the credit risk is not passed on to the principal. So compared to a normal agent, del credit agents is generally receiving more commission. Now let's look at this transaction. Assume that Mr. Raju is a del credit agent, also a para 3 agent, which means Raju is giving invoices in his name and it's a credit sale. So for Raju to ensure payment, if there is any delay, Raju will collect interest. So 50,000 rupees worth TV is supplied by Raju to customer. It's a credit sale, but Raju is giving the invoice because Raju is para 3 agent. And Raju is getting 55,000 even though Raju is only paying 50,000 to Samsung. Now let's look at what are the supply that we have here. Samsung is making supply of goods which is worth 50,000, which is without any consideration. Will it become a supply? Yes, because Raju is a para 3 agent. So first supply would be supply of goods by Samsung to Raju. Second supply would be supply of goods by Raju to customers, which is 55,000, not 50,000, because interest will be added to the value under section 15(2)(d). It's an interest on delayed payment of consideration. Raju is making supply of goods, Raju is getting extra consideration. Raju is also getting commission from Samsung, which is a supply of service by Raju to Samsung. These are the activity that happens. But what if Raju is not a para 3 agent but still a del credit agent? In that case, Raju is not a para 3 agent means Raju is not issuing invoice to the customer, right? So then who is issuing invoice to the customer? Samsung can directly issue. Raju is making supply of TV to customer, which means Samsung is giving TV to Raju. It's a transfer, it's not a supply because Raju is not a para 3 agent. So a principal giving goods to agent who is not a para 3 agent is not a supply. So Raju is also just transferring TV, he is not making supply because he is not issuing in his invoice in his name. But Raju is giving 50,000 rupees to Samsung, Samsung is giving invoice directly to the customer. So who is supplying TV to customer here? It is Samsung. So supply of goods by Samsung to customer. Now Raju will get commission on this from Samsung, so Raju is providing supply of service to Samsung. Raju is also getting 5,000 rupees extra from the customer because it's a credit sale. But is this 5,000 a consideration for supply made by Raju? No. Raju is not making any supply of goods. So should this 5,000 be added to the value? No. Here, since Raju is not a para 3 agent, we will consider this transaction as an independent transaction and we will not add this 5,000 to the value of TV. That's the very basic understanding. That's a circular clarification. Now, this is already tested with an computational question. Now, how do I, what is the next set of circular that they can test? It is on EMI transaction. Carefully be with me on EMI transaction. I'll explain you an example there as well. Say you go to MyG. MyG is a retailer of mobile phone. And MyG is saying that you can buy mobile phone in two methods. Customer, you can pay me 80,000, I'll give you an iPhone. Method 1. Method 2 is that you give me 80,000 in installments together with interest. I'll give you an iPhone today. Now MyG is getting 88,000, 8,000 as installment, 11,000 into 8 months, 88,000 in total, and they are giving an iPhone. My question is, if that's the case, what will be the value of supply of this particular mobile phone? It will be 80,000 or 88,000? They said, the question that we are asking here is this interest of 8,000, should it be added to the value or not? Now, who is collecting this 8,000 interest? Supplier. On what supply? Supply of goods. So, will it be considered as interest on delayed payment of consideration? Yes. But is this the method in which commonly in EMI transaction work? No. How EMI transaction right now works? It works like this. Say, MyG is the supplier. Okay, MyG is the supplier. MyG will have a tie-up with Bajaj Finserv and say the customer, if you can either pay me 80,000 directly or you can take a loan from Bajaj Finserv. And Bajaj Finserv will pay 80,000 to MyG right now itself. But the customer can pay 11,000 in 8 installment to Bajaj Finserv. Now here the interest is collected by Bajaj Finserv. Should this interest be added to the value of supply? The answer is no. Reason, MyG is the supplier. Is MyG collecting any interest? No. So this interest is nothing but interest on loan facility which is exempt under GST. Are you guys understanding this? Now, going back to our discussion, so value of supply chapter discussion is over. This is more than enough for you to go and write that 5 mark, 6 mark question in value. So, what next you should do? Look at our workbook. Look at couple of very important questions. Tomorrow evening, keep that for you. Like look at couple of questions in value so that you get the format correct. Okay. No need to work it out. Just look at question. Let's look at the answer. That is more than sufficient. Going back to our discussion, the next chapter that we are going to discuss would be exemption chapter. I want to discuss exemption chapter because a lot of students end up not revising exemption chapter. So it's important that we go look at exemption chapter, revise the entire exemption. So how much time is our target, guys? How fast can we discuss exemption? And you should get each and every point from that. So we'll give half an hour, 40 minutes, 45 minutes. Let's see how much we are able to get it on a fast track revision on exemption. Are you guys ready? Okay, let's look at exemption with super fast revision. Okay, so you guys be with me. Whenever I'm asking a question, what's your responsibility? Answer on the chat box. Just let the chat box be very active so that if you guys have some confusion, ask others and then get the answers then and there. Okay, just keep typing. First of all, what is the difference between exempt supply and zero rated supply? Exempt supply includes three things. Non-taxable supply. Example, HP man, high-speed diesel, petrol, motor spirit, aviation turbine fuel, natural gas, all of these are non-taxable supply called as exempt supply. Nil rate supply. In the table wherever you have nil rate, that's also exempt supply. Wholly exempted by notification. These three are exempt supply. When you make an outward supply, no taxes paid, no ITC when you make a purchase of these. So if you are fully into exempt supply, then you won't take any ITC at all on your inward supply. Okay. Now, what is zero rated supply? Zero rated supply is not a particular goods or services which is zero rated. No, it's an activity. When you export anything which is taxable, which is taxed at 28%, which is taxed at nil rate, or which is taxed at wholly exempt, which is taxed at 18%, if you export, it will be treated as zero rated supply and you can take ITC. You don't pay any taxes, but you can take ITC. Supply made to special economic zone is also a zero rated supply. It's an activity. It does not matter what goods you do. It's an activity which will be, you don't pay any output tax, but you can take ITC. So zero rated supply is akin to or very similar to a taxable supply because you can take ITC. It's a taxable supply without GST payment, like that. Okay, now in that, exempt supply can be of different types, I said. Now, what are the exempt supply what are the exempted, what are the services which are exempted under GST is the discussion that we are going to have. Section 11 of CGST Act is where they are giving exemption. Government can do that. Now, they have multiple industry that is being discussed here. The first one, charitable entities having exemption. Now, important point. For a charitable entity to get exemption, two conditions to be satisfied. One is the charitable entity should be registered under 12AA or 12AB. There is a new section in income tax which is 12AB of Income Tax Act. You should be registered there and you should provide specified charitable activity. How many activities are specified? 4. What are they? Activity relating to public health. Advancement of 3 things. Religion, spirituality or yoga, and yoga is important, that tested multiple times. So if a 12AB entity provides yoga training, it is exempt. Advancement of religion, spirituality or yoga is what they have said. Then advancement of education is also a specified activity, exemption is available. Preservation of environment also has exemption. Clarification question asked, activity of a school college in rural area for skill development of abandoned orphans, homeless children, mentally abused person, is it a specified charitable activity? Yes. Will it be getting exemption? Yes. What about a hostel run by a trust? Is it a specified activity? No. No exemption is available. Now, is it yoga is exempt? What about fitness camp like aerobics, dance, music? Other than yoga, will it be exempted? No, it is taxable. What about residential program for religion, like Dhyanam Kudal, right? Residential program for yoga, residential yoga and Isha Yoga Center. Would it be exempted? Yes. So religion, spirituality, yoga, if it's a residential program also it will be exempted, provided the primary activity, the word they have used is primary activity should be spirituality, yoga or religion. What about services provided to religious or charitable entities? Is there any exemption? No. Then, what about conduct of religious ceremonies? There are a lot of religious ceremony for death, birth, etc. Will it be exempted? Yes. What about religious place given on rent? It will be exempted provided it's within a limit. What's the limit applicable? If it's a room, it should be less than 1,000 per day. If it's community hall, Kalyana Mandapam or open area, it should be less than 10,000 per day. If it's shops, it should be less than 10,000 per month. Please note, exact 1,000 and 10,000 are taxable here. Religious pilgrimage, Tirtha Yatra, will it be exempted generally? No. Only government organizations, packages of religious pilgrimage will be exempted. What are those organizations? Kumayon Mandal Vikas Nigam Limited and Hajj Committee State or Center. We have already seen training on recreational activity. We said that will be exempted only if it's arts and culture, it should be provided by individual. If it's sports, should be provided by 12A or 12AB entity. This is the first industry discussion. Second, we had to discuss about agriculture related activities. Important, lot of questions are there. What are the exemption available for agriculture related activity? So first of all, you should know that agriculture related activity has exemption. For that, agriculture is important definition. It includes cultivation of all plants, rearing of all life forms except horses. Horse farm will not get exemption, but agriculture will get exemption on fish, flower, animal husbandry, etc. First three are direct activities relating to agriculture. What are they? Cultivation service, harvesting service, plant protection, testing, certification, etc. Supply of farm labor is exempt. Renting of agro machinery is exempt. Vacant land is exempt. Now the product is ready. What will you do? You make the product marketable in primary market. Whatever activity is done like trimming, cleaning, drying, etc. that will be exempt. Say in a farm of an agriculture, there is trimming, cleaning, etc. is done by an organization, that will be exempt. But what if the activity is changing the essential character? Like if I am doing an activity in an agriculture farm of potato and making potato chip, that will not be exempted. It's changing the essential character. Then loading, unloading, packing, storage and warehousing of agriculture produce is exempt. We need to understand what is agriculture produce then. We said rice is not an agriculture produce, is an important clarification. What is an agriculture produce? Paddy is. However, rice has all the exemptions except milling of rice, which means transportation of rice is specifically exempted. GTA, if you transport rice, it's exempt. LUPSW of rice is also exempt, specifically exempt here. Look at rice. Loading, unloading, packing, storage and warehousing of rice is also exempt. But what is taxable? Milling of paddy into rice is taxable. Then, tea that is used in black tea, green tea, white tea or processed coffee is not an agriculture produce. So, LUPSW will be taxable. But green tea leaves or coffee beans and agriculture produce, they will be eligible for exemption. Similarly, jaggery is not an agriculture produce, it will be taxable. What is an agriculture produce? Sugarcane is an agriculture produce. Then, pulses is not an agriculture produce. It undergoes process such as splitting, dehusking. But specific exemption is given for warehousing of pulses. Also, transportation of pulses by GTA is also exempt. So, if pulse is not an agriculture produce, what is an agriculture produce? Whole pulse grain like pyre or one pyre or rajma, this is the agriculture produce, that will get full exemption on LUPSW. Now warehousing now exempted only for 7 items I have told you. Agriculture produce, milk, pulses, cereals, fruits, vegetables, minor forest produce. Minor forest produce like tamarind, wild honey, okay, all these will be exempted warehousing. Fumigation is now taxable. Intermediate production processes job work except for milling of paddy into rice, all other intermediate production processes exempt. Artificial insemination of livestock other than horses also exempt. Education service, it's like a 5-star area. There are no examination where they don't test anything on this. So learn this in full and ensure that you don't have any surprises in the examination. Now you should remember that we have even amendments in this, so that makes this even more important for us to go and look at. There are 3 types of education institution under GST. One is preschool till higher secondary, which means private tuitions are not an educational institution. But all type of schools, government school, aided school, everything is an education institution, including your kindergartens. Everything is an education institution. Preschool means kindergartens, okay, play school and everything. Second, institution having curriculum recognized by any law in India. Indian courses like Indian universities, Indian graduation, ICI, everything is an education institution under GST. But foreign courses like CPA, CCA, etc. is not an education institution, that will be taxable. Approved vocational training institution like ITA, ITC is also an education institution. The first question, what kind of services of them are exempted? That's also a restricted exemption. If they provide services to SSF, what is SSF? Student, staff, faculty, it will be exempted in all 3 cases. If they conduct entrance exam, collect some money, that will also be exempt. What about services provided to them? If a third party provides services to them, it is exempted with some conditions. What is the condition? First 4 exemption is applicable only if it's provided to, first 3 exemption is applicable if the recipient is preschool till high secondary or category 1 education institution. What are the services? Transportation of student, staff, faculty, catering including midday meal system, security or housekeeping in the premises of education institution. So if the security service is given to a college, no exemption. Security service is given to a school, it is exempt. Now cleaning service is given to a school for the youth festival conducted in an auditorium. To clean the auditorium, will it be exempted? Will it be exempted? It will not be exempted because it should be premises of education institution. With me? Now these three are taxable if you look at the other two category of education institution. However, services relating to admission or conduct of examination is exempt if it is provided to any of them. This is the understanding that we have taken from that amendment also. We said National Board of Examination is considered as which category? Second category. Thereby, if they provide entrance exam, it is exempt. If they receive service relating to conduct of examination, is also exempt. Similarly, online education journal, if it is provided to second category, is exempt. First and third category is taxable. So it's all variety. So you should remember this table in full. What about campus placement? Campus placement services are provided to corporates. So thereby it will be taxable. Then there is clarification. Private ITIs. Private ITIs, will it be exempted or taxable? Private ITIs is also exempted provided they are providing courses of Apprenticeship Act. Then boarding school. What do you mean by boarding school? It has school, dwelling unit and food. It's a composite supply. All are exempt. What about dual qualifications? Now you have colleges which is giving both BCom and ICCA. You ask them, is it separately billed? Then exemption will be there for the recognized course like BCom. If it's clubbed billing, put together one amount, so it will become mixed supply and highest rate will be applicable on the entire bill. But incidental and ancillary courses is nothing but composite supply. If the main course is exempted, you will get full exemption. What about hostel mess service? If it's provided by education institution to student, it is fully exempted. If there is a third party caterer to school, it is exempt. It's third party caterer to other education institution is taxable. There are courses that is approved by DG Shipping, Director General of Shipping. Marine courses, maritime courses, they are exempted. That's an amendment. IIM has a lot of programs like 2-year MBA program, fellow program, 5-year integrated BBA plus MBA, all of them are exempt. But executive program like ICA has a tie-up and they have a program for executive, that will be taxable. Healthcare has an amendment. What is it? What do you mean by healthcare? Healthcare provided by clinical establishment is exempt, authorized medical practitioner is exempt, paramedics. Okay, so hospital, doctors, nurses, etc. Including transportation of patients, only patients if you transport by ambulance, it's healthcare. Then, what do you mean by healthcare? Healthcare is diagnosis, treatment, care, illness, injury, deformity, etc. But only in recognized system of medicine. So if you do the treatment, care, diagnosis, care means palliative care center is also included. Diagnosis means laboratories are included. They are all healthcare, all exempted. But it should be in recognized system. What is recognized system? What is the code word that we have? Ayushna, Ayurveda, Yoga, Unani, Siddha, Homeo, Naturopathy, Allopathy, all of them. So Reiki treatment is taxable, pranic healing is taxable, acupuncture is taxable. Healthcare includes transportation of patients to and from clinical establishment. Air ambulance is exempted if it's provided by hospital. But it excludes hair transplant, cosmetic, plastic surgeries. Hair transplantation, cosmetic, plastic surgeries are not healthcare unless it is undertaken to reconstruct a body part. Okay, otherwise it's beautification, that are taxable. Room rents were earlier exempted. Now we have already seen it should be less than 5,000. Otherwise it should be ICU, etc. What about hospital receiving services from consultant doctors? That's also healthcare. It is exempt. Hospital is charging 10,000 rupees. Out of that, 7,500 is consultation, 2,500 is using facility, entire 10,000 is exempt. What about food supplied by hospital? If the hospital canteen is giving food, it will be exempted only if it's given to inpatients, which means admitted patients. Okay, admitted patients. And all other patients like bystanders and OP patients, patients who are coming there and then going, on staff, all of them will be taxable. What about display of advertisement? They are also taxable. Pharmacies, they are taxable. Now let's look at government exemptions. Okay, very important. I've already told you half of this. First one, I told you that government services are generally exempted. It says it's generally exempted because generally it's provided to public. What if it's provided to business entity? Business entity, if it's provided by government or local authority, it is taxable under RCM. It's taxable under RCM. Now, if it is provided to business entity itself, some services are taxable under forward charge. What are they? Postal Department services. Now, Postal Department services are exempted only if it's BIPO. What is BIPO? Book Post, Inland Post, P4, Postcard, O4, Ordinary Post less than 10 grams. Similarly, service in relation to vessel or aircraft, taxable under forward charge. Transportation of passengers or goods is also taxable under forward charge unless it's exempted by another entry. These are under forward charge provided by government. It's taxable even if the recipient is an individual, like public. Additional exemption, they said, if governmental authority does functions of panchayat or municipality under Article 243 GW is exempt. A business entity getting services from government will be exempt if they are a small business entity. If the government or local authority provides services to a small business entity having aggregate turnover less than the threshold limit, it will be exempted. But the same exemption is not applicable for postal services, vessel and aircraft and transportation. Even it's not applicable for renting of immobile property by government. Okay. Then this is small business entity exemption. Not everybody gets this. Then there is small consideration. If the business entity is receiving services and the value is less than 5,000, that's also exempt. But the same exemption is again not applicable for first three cases, forward charge cases. Small consideration exemption. Now, one business entity to another business entity of the government, it is exempt. Then service like registration, testing, calibration is exempt. Guaranteeing loan of public sector undertaking, it's already discussed in exemption. They have clarified in exemption, that's also exempt. This is important now. Old age home. I have seen a question on one of the RTPs and all that. Old age home exemption will be available only if you satisfy multiple conditions. First, old age home monthly rent should be less than or equal to 25,000. Second, who should run this old age? Either government or 12A entity or governmental entity against a grant. To whom this the old age will be open? To only to resident 60 plus years. Then driving license, visa, passport, birth certificate, death certificate charges are exempt. Toleration of non-performance by government, liquidated damages or fine is not even a supply now, clarified. So no taxes. Assignment of right to use natural resources by farmer for agriculture. Deputing officers for inspection, container stuffing. If you apply to government to get an additional officer at the time of import for holidays and after office hours, and you're paying merchant overtime charges, is exempt. Excess royalty collection contractor services are exempt. Rehabilitation professional in medical establishment, education institution, etc. are exempt. Like mental health professionals, okay, therapy and all that. Construction service will get exemption in 3 different cases. First of all, it should be pure labor contract. There could be 2 types of contract. One is works contract, wherein your contract has both goods and services. You will not have exemption if the contract of, say you're constructing a house, 50 lakhs is the value for construction. Out of that, 25 lakh is service, 25 lakh is goods. You will never get exemption because 50 lakh will be treated as works contract. But if you are billing only for service, then you get an exemption. How? It should be construction, erection, commissioning of original work under Housing for All Urban Mission or Pradhan Mantri Awas Yojana. You're getting money under PMAY scheme or Housing for All Urban Mission scheme, and you're giving this to a pure labor contract. Second, again pure labor contract, but this time the money is paid by you for construction, erection, commissioning, installation of original work, does not include repair. Other than repair, you're constructing a fresh house and you're giving only a labor contract to the contractor. What fresh house? Single residential unit. It should not be a flat other than residential complex. Then your service charge is exempt. Pure labor contract is exempt. What about transportation of passengers? It has three types of exemptions. Basic exemption, railway except AC and first class, everything else is exempt. General, sleeper, everything is exempt. Mono, metro, tramway is exempt. Inland waterways is exempt, like backwaters, river, exempt. Public transport and vessel between places in India, we have seen an exemption clarification. We said in Andaman it can be owned by, public transport can be owned by private party also. Metered cabs and auto rickshaw are exempt, including e-rickshaws. But your metered cabs and auto rickshaw, if it's booked through Uber, it will be taxable. Non-AC contract carriage, again booked through an e-commerce operator, will be taxable. Otherwise, non-AC buses are exempt. Stage carriage, contract carriage. Stage carriage means stops in different stages. Buses you think about. By air, if there is a airport under RCS scheme, Regional Connectivity Scheme, and the government gives viability gap funding. If there is a viability gap funding received from government for RCS airport, it is exempt. Northeast, now economy class is exempt and business class is now taxable. That's an amendment. So what is taxable? Radio taxi like Uber, etc. Railway first class and AC is taxable. Air conditioned buses are taxable. Tourism is taxable. Flights is taxable. What about goods transportation? If you are transporting goods by road, it's fully exempt except for GTA and courier. In GTA also you have exemption. How do you identify GTA? When there is a document called as consignment note that is issued. When there is consignment note, we will call that as, when there is consignment note, we will call them as GTA. Now, in case of GTA, do you get exemption? Yes, there are some exemption even for GTA. Now, we said by road other than GTA and courier is only fully exempted. Okay. In GTA also there is exemption. If there is consignment note, it is GTA. What are the exemption? Other than specified person receives services. So, you think about unregistered individual and HUF, they are called as other than specified person. If they receive services, it's exempt. If it's a specified person, it is taxable under RCM. Okay. Now, even if they are specified person, if you transport following goods, what is the code word for that? Random. It is exempt. If you transport random with vessel or railway or GT, it's exempt. What are those products? R for relief material, A for agriculture produce, N for newspaper magazine, defense equipments, organic manure, milk, salt, food grain including flour, pulse and rice. Very important, they are asked multiple questions on these products called random. Inland waterways is also fully exempt if you transport goods. Next is banking and financial services. Let's look at what is the context of this. In banking and financial services, there is amendment now. Earlier, services by RBI was exempt, now taxable. Now, in case of financial services, interest. So, if you look at services like extending loans or advances or accepting deposit, insofar you are receiving consideration which is interest or discount is exempt. So, bank loan, bank deposit, interest or discount is exempt. But bank charges like ATM charges, all that is taxable. Only one interest will be taxable, which is interest on credit card. Even if you look at bank charges, if the bank charge is on debit or credit card transaction, if the transaction is up to 2000, it is exempt. And if there is any charges on BSBD account, basic savings bank deposit account, basic savings bank deposit account or PMJDY account, it is exempt. Now, one common summary and examination tip for all of you, if the examination question talks about Pradhana Mantri and all that, some schemes of the government, we can, without even thinking, we can say that it is exempt. Are you understanding? Okay. Then, what about commission on foreign exchange transaction? So, if you do convert dollar into rupee, rupee into dollar, euro into rupee and all that, then if it's done by bank and bank, sale and purchase of foreign currency amongst bank and bank. If SBI receive commission from federal bank, it will be exempt. But commission on sale on foreign currency to general public. So if they get forex commission from public and business, it will be taxable. Now specified bodies, if they provide services, I told you it is exempted. Now some exemptions are withdrawn. IRDA and SEBI services are taxable. Other institutions like ESI, EPF, coal miners provident fund, NPS trust, all these are exempted still. Business facilitator and business correspondent are people who work closer with the banks and insurance. These people, if they provide services to a banking company or insurance company for their rural branch, it is exempt. Even an agent of a business correspondent provides services to a rural branch, it will be exempt. So the catch there is rural branch. Okay, now there's been a marathon, so I wanted to throw another break so that I am also given some time to recoup with some energy. So we'll take another 10 minutes break. We come back, but do come back. Okay, just push yourself to be here throughout so that whatever discussion we are doing, you are part of that. Okay, so another 10 minutes and we'll be back. Then we'll discuss the rest of the exemption and then I'm going to ITC chapter. Welcome back everyone. So let's continue with our discussion. I hope my AV is clear. So next exemption that is available is on leasing services. So what's the exemption that is available on leasing service? So if you look at the lease has to be a long-term lease. What's the meaning of long-term lease? It should be for more than 30 years. Now when I'm taking something on lease, I will pay, if it's more than 30 years, I'll pay two payments. One is lease rental, another one is an upfront premium. Is lease rental exempted? No, only upfront premium is exempted. The upfront premium can be something that will be fixed as an upfront premium. Let's say 2 crore is the upfront premium, but it can be paid even in installments, still exempted. For what kind of lease will be exempted? Lease of industrial plot, a manufacturing plot or a financial business plot. Say a plot that is given for a banking company. Now it has to be used for the said purpose, otherwise exemption will be withdrawn. Who is giving it on lease? It has to be given by government or governmental undertaking. Say Kinfra is giving a manufacturing plot to Kitex for 40 years or 50 years, and Kitex has to pay 5 crore as an upfront premium, that will be exempted. But if the Kitex is going to use it for some other purpose, the exemption will be withdrawn. Now legal services. Legal services, the understanding is very simple. We will look at that with another understanding together. Just one summary screen is enough for you to learn advocate related provisions in GST. So for advocates, we have two set of provision in GST. One is the legal system, like the district court, high court. Whatever fees that is collected by the legal system, that fees will be not be considered as a supply at all. So if you look at negative list, it says that fee collected by court or tribunal is not even a supply. Then who else is there in the legal system? Advocates are there in the legal system, right? So advocates, can be individual advocate, senior advocate, or firm of advocates. And if there is an arbitral tribunal like an amicable settlement court, all of them will also be under legal system. Now, what is their taxability? If they provide services to a person other than business entity, like an individual who's not even registered, or an HUF who's not even registered. So, a person other than business entity, if they provide services, it will be exempted. Second, if they provide services to government, local authority, governmental entity, that's also exempt. Even if they provide services to a small business entity, it's exempt. What's a small business entity? The business entity whose turnover is less than the threshold limit. Please note, even if they are registered, voluntarily registered, say in Kerala, an advocate provided services to a bakery whose turnover is 5 crores, but they voluntarily took registration, it will be still exempted because it's a small business entity. Now, if they provide service to Reliance, it's a big business entity, aggregate turnover is more than threshold limit, it is taxable under reverse charge mechanism. For all of these 4 people, it will come under the same set of reverse charge. So, all of this can be clubbed together and then try to understand. Then, skill development courses are exempted. There are 3 exemptions that you can see it on the screen. One is, if the service is provided by National Skill Development Corporation, NSDC, their services are exempt. Services of assessing body is empaneled. Say a private coaching center is empaneled as an assessing body, their service is exempt. There are a lot of government schemes like Deena Dayal Upadhyaya, Gramina Kaushalya Yojana. I have already told you, if you see any government schemes, you just directly think of exemption. No need to think that what if this government scheme is not exempted. No, they are not testing like that. Next exemption is also tested multiple times. Performance by an artist. They said artist performance, a singer, a dancer. What will be their exemption that is available for them if they get some money for singing, dancing, etc. They said if the performance is in folk or classical art forms of music, dance, theatre, you will get exemption, provided your consideration is less than 1,50,000 and you're not doing it as a brand ambassador. Then admission to following places are exempt: zoo, national park, tiger reserve, museum, wildlife sanctuary. Now, if you look at these places, there is no limit that is given to these places. Okay. Irrespective of whatever may be the entrance fee, these places will have exemption. Irrespective of whatever may be the entrance fee. Okay. Which are the places? Zoo, national park, tiger reserve, museum, wildlife sanctuary. Even protected monuments like Taj Mahal. It's a protected monument. It may be 5,000 rupees collected for entry, still exempted. But there are certain places exemption is available with a ticket cap. Which are the places? Circus, dance, theatrical performances, planetarium, award function, concert, musical performance, sporting event, which can be like recognized sporting event or not recognized. Say IPL match is going on and I'm going for a 300 rupees ticket, exempt. I'm going for a 1,000 rupees ticket, it will be taxable. That's the understanding difference. Then, services by unincorporated body or NPO to which members by way of reimbursement of charges or contribution of money. First possibility that we should understand is an unincorporated NPO or to members means association. They are talking about membership fee paid by a member to an association. Will it be exempted? They said if their association is trade union, it's exempt. Or that association itself is providing exempted goods or service. Say there is an association which is cultivating fruits and vegetables and selling. They are supplying exempted goods. That such associations membership fee will be exempted. Then they said housing society maintenance fee. If you're staying in a flat, what about the maintenance fee? So there are a couple of points that they have clarified in maintenance fee. Let's look at an example to understand that. say there's a flat called Skyline Legends in Kochi, and they have 15 flats. Each flat is paying 10,000 rupees, which is more than 7,500. It should be taxable, right? But you look at what is the total annual turnover of this association. It will be 10,000 into 15 flats, 1,50,000 per month, which is 18 lakh per annum, which is less than the threshold limit. So there is no need to pay GST on the maintenance. However, so if you look at DD flats, it has 100 flats. And each flat is paying 5,000 maintenance, which is yearly. They're getting 60 lakhs turnover. Should they have to register? No, because again each person is contributing 5,000, which is less than 7,500, which is exempt. So they said either you will get exemption because your residential welfare association's turnover is less than the threshold limit, or your monthly maintenance is less than 7,000, less than or equal to 7,500. Assume Mr. Raju is owning 2 flats. Each flat 5,000 maintenance, 10,000 is paying. Will it be exempted? Yes, because maintenance needs to be computed per membership. Each flat will get 1 membership. That's a clarificatory circular. Now other exemption, transfer of going concern is exempt. Transit cargo to Nepal and Bhutan is exempt because they are landlocked countries. This we have already discussed. Renting of residential property for residential purpose is exempt only when it is rented to a person who is not a registered person, okay, except where dwelling is rented to a registered person. Means what? When it is rented to a registered person, it is taxable under RCM. Other than that, it's exempt. Accommodation in guest house, hotel, etc. is now taxable irrespective of the limit. Distribution companies like KCB is giving you transmission or distribution of electricity. Electricity is exempt, but electricity bill will have charges like installation, meter rent, duplicate bill, that will be taxable. Access to bridges or upon payment of toll charge is exempt. Now providing vehicle on hire has 4 exemptions. Very important. There are multiple examinations, this is tested. Number 1, if you give a vehicle on hire to a state transport undertaking, a motor vehicle for more than 12 passengers exempt. If you give a goods transport vehicle, a truck to GTA, exempt. If you are subcontracting, you are giving transport vehicle for somebody to do transportation of students, staff, faculty of preschool till higher secondary, then it's exempt. If you're giving to a local authority, it should be an electric vehicle for more than 12 passengers, it will be exempt. Incubating means startup. Technology startup will have exemption if the turnover of them is less than 50 lakhs and it's less than 3 years of operation. FSSAI now is taxable. Food and Safety Standards Authority of India. Biotechnology incubator like Techno Park, Biotechnology Park, their services are exempted. Collecting and providing news. Organizations like PTA, Press Trust of India, United News of India, they do collecting and providing news, that is exempt. Public library membership is exempt. Embassies, foreign diplomatic mission like US Embassy, UAE Embassy, other country will have embassy in India. Their attestation services, you apply for visa there, right? Visa services, all of these are exempt. National Center for Cold Chain Development Services are exempt. If you take preconditioning, pre-cooling, etc., ripening, retail packing, etc., fruits and vegetables for durability, that is exempt. Slaughtering of animals like kashapu shapu was earlier exempted, now it is taxable. Okay, that exemption is gone. Then, this is important, they've asked examination questions. If there is an exhibition outside India, then it's exempt. Say, Tata is going with their Nexon car in New York exhibitions, exempt. Delhi exhibition, taxable because the exhibition has to be outside India. Providing information under RTA Act. If you want something from RTA Act, you will have to pay. How much? RTA Act you will have to pay 10 rupees, 20 rupees, that is exempt. Okay, then a recognized sports body, if they provide services to another recognized sports body, it is exempt. If following people get services to recognized sports body, say BCCI is a recognized sports body. If the service is provided by 5 set of persons, what is the code word for that? PR cut. Player, a referee, coach, umpire and team manager. If PR cut provides services to recognized sports body, it's exempt. Anybody other than PR cut, like commentator, curator, okay, all of these people, if they provide services, selector, it will all taxable. Only PR cut is exempt. Okay, individual who are PR cut, player, a referee, coach, umpire, and team manager. Common biomedical waste treatment is now taxable. Public conveniences are exempt. Then, ambulance by National Health Mission is exempt. Even a private person giving ambulance to government is exempt. Insurance by government is exempt. Okay, so government schemes are all exempt. Like NPS annuity is exempt. Army General Insurance Fund is exempt. Premium related schemes is exempt. Micro insurance policy where sum assured is less than 2 lakh is exempt. This is tested in multiple exam. Services provided to government, local authority. Now the governmental authority and governmental entities removed. Okay, so if service is provided to government or local authority, what service? It should be pure labor contract. So I'm a contractor, I'm a third party contractor, and I provide services to government or local authority, that will be exempted, provided it's pure labor contract. Or it can be a composite supply, the value of goods should be less than or equal to 25%. Now give you an example, say I am doing a service, I am a third party contractor, I am a PWD contractor. What I do maintenance contract for street lights. I took a contract for 1 crore. I will do maintenance for street light, pure labor 1 crore to government. Urban planning. Constitutional Article 243 GW activity it is. 1 crore contract for maintaining street light, taxable or exempt? Exempt. Third party to government, it's a pure labor contract. Now they said I'll replace the bulb also for 20 lakhs. Out of 1 crore, 20% is good, still exempt. I said I'll replace the bulb for 50 lakhs, taxable or exempt? Taxable, the entire contract, because you are having a composite supply and more than 25% goods is involved. General insurance like cattle, etc. is exempt. Fair price shop, ration shop, services by ration shop by selling these items and they receive a margin is exempt. Training program where 75% or more expense is borne by government is exempt. Services by GST network to government is omitted, now it is taxable. National permit to goods carriage is exempt. This is the complete list of exemptions. Are you guys understanding this? Can I have a quick yes to just understand you guys are there listening to me? Everybody who's there still, keeping yourself awake and then, trying to revise. Congratulations to you for keeping your spirit going and giving all in out for that. Let's continue with the next chapter. Perfect, guys. You guys are amazing. You guys are still holding on with full energy. Okay. So let's go ahead with the next chapter. So you suggest me which chapter I should go next. I'll give you two options and you choose. Option number 1, I can go and finish ITC chapter. Option number 2, I can go and finish charge chapter. Which one do you want me to do the recap? ITC, charge. Let's do a poll and then we'll decide. Quick poll for everyone. I think ITC is still going strong. I think that's a very important chapter to recap. Let's see if charge is able to catch up with ITC's pace. I'm ready with anything. I think ITC is the single most winner. 84% of attendance is saying ITC. So let's go to ITC and then finish ITC, guys. Very important. So ITC chapter has which are all sections for us to cover. Section 16, section 17, section 18. That's all. Just 3 sections and respective rules. Section 16 talks about conditions for availing ITC. Section 17 talks about 2 things. One is block to credit, another one is apportionment of credit. Fortunately, apportionment of credit is no more part of our discussion. They have removed it from our syllabus. You don't have the rules, just the basic understanding is enough. So our discussion would be precisely on what? Will be on block to credit. Then section 18 has areas which is not yet tested to extent. So we will look at section 18 also to ensure that we have clarity on those. But very easy to go through. I've already given you the amendment, so it's just a random walk for me to give you an understanding on ITC chapter. So it will be more of me telling you, look at the books, look at the provisions. This is what we have already discussed. Every person can take ITC if they pay tax on your inward supply, provided it is used or intended to be used in the course of furtherance of business. How many conditions to be satisfied? Now 6. 4 conditions were earlier there. What were the 4 conditions? Number 1, they should be in possession of tax invoice, debit note or other prescribed document. What are the prescribed document? It can be tax invoice, revised tax invoice. It can be a debit note. It can be invoice under RCM together with payment. It can be input service distributor document. If I do import, and when I'm importing, what are the taxes I will pay? Customs and IGST. So if I want to take credit of IGST on import, I will have to show bill of entry. So I should be in possession of this prescribed document. Second, I should have received goods or services. Third, tax should have been paid to the government either by cash or through utilization of credit. Return under section 39 is furnished, which is 3B. Apart from that, now additional condition 16(2)(a) says what? Details of invoice or debit note referred to in clause A. Whatever invoice you are having, now you want to take credit, it has to be uploaded by the supplier in their GSTR1 or IFF, and such details should be communicated to you in your 3B. In your 2B. Okay, so it should be communicated to you. Then it should not be restricted by government. That's the additional thing that is being inserted. Now, invoice has a lot of details that is mandatory to be there. Like, and this is the invoice format. Like, invoice does not have format except for e-invoices. But invoice has a lot of content that needs to be there for invoices, right? Now, what if these contents are not there? Is it a valid invoice? That's it. At least 5 details should be mandatorily there, then only you can take credit. What are the 5 details which should be there mandatorily? 1, amount of tax charged. 2, description of goods or service. Value of supply. GST number of supplier and recipient should be there on the invoice. Place of supply in case of interstate supply. So tax amount is what you are taking credit should be there. If are you taking credit on eligible goods, so description should be there. Value should be there. GST number of both of them. Place of supply. These 5 details is minimum requirement for you to take credit in an invoice. Now, second condition says you can take credit only in the month in which you receive goods or service. What if I receive goods? Those one invoice, I purchased 1000 kg of product. 200 kg came first, 300 kg came next, 500 kg came next. So goods are coming in installments, or service I am receiving in installment. When can I take the credit? Only upon receipt of last lot or installment. So that could give you questions wherein they'll say that you've taken the credit in February, but the software was tested and finished only in June. When can you take the credit? Only in June. Like, you should receive goods or services. If they are in lots, you should receive the last lot, only then you can take full credit. Okay. But it's not necessary that you should receive. What if a third party receives on behalf of LP? If the agent receives, then in the month in which the agent received, they can take the credit. Say, if they purchase something, if LP is purchasing, you look at this example. LP is getting some raw material purchase from factory in Coimbatore. But Coimbatore factory is delivering it to Tirupur dealer of Tirupur job worker of LP. The month in which job worker receives the goods, that month LP can take the credit. So, third note says that if you can read the third note, it says if a third party being an agent or not, receives goods or services on behalf of registered recipient, it is deemed to be received by registered recipient, and registered recipient can take ITC in the same month in which goods or services received by third party. Logical, right? Okay, so next is, so you're purchasing certain goods, and suppose you are purchasing a capital goods. What is capital goods? Goods which are capitalized in the books. So I'm purchasing a machinery for 10 lakh plus GST of 1 lakh 80,000. Now, how much credit I can take? If you capitalize entire 1 lakh 80,000 taxes as part of your machinery value in the balance sheet, you cannot take credit of 1 lakh 80,000. If you capitalize only the value of machine, which is 10 lakh, and 1 lakh 80,000, you can take it as ITC. Reason, if you capitalize the entire taxes also, then you're going to claim depreciation on the taxes. So ITC will not be allowed. But however, suppose you purchased a motor vehicle where you don't have ITC, then can you capitalize your tax paid on purchase of motor vehicle? Yes. There you are not taking ITC, you can capitalize, and you can take depreciation even on the amount of tax paid. Are you understanding this? Now, time limit is something that we have already discussed, so no point in giving extra time on that. Now, next is payment condition for availing ITC. The first and foremost point all of you should understand is that payment is not a precondition for you to take ITC. What is the position that we have for it? Payment is not a precondition, which means if you satisfy all the conditions, if you satisfy all the conditions, you can take ITC. You don't have to, as a customer, as a recipient, you don't need to make payment of consideration to the supplier. That's not a precondition. Credit sales also you can take credit. That's the whole understanding. But you should make the payment to the of consideration to the supplier within a reasonable time. What is that reasonable time? 180 days. If you don't do that, you will have to reverse the credit you have taken with 18% interest. Now let's read. That's given in rule 37. Multiple questions are there, so I would suggest you to look at questions on this as well. This is also being tested on multiple scenarios now. If payment of consideration, that is value plus tax, is not made within 180 days from the date of invoice, so there's some question on the chat box which says motor vehicle, isn't it blocked as per 17.5? Yes, that's why I said if the motor vehicle is a blocked credit, you can take depreciation even on the tax paid on purchase of the same. Payment conditions is if payment of consideration, that is value plus tax, is not made within 180 days from the date of invoice, ITC already claimed needs to be reversed and added back to liability for the month on which 180 days is expiring. So you will compute from invoice date 180 days, which month 180 days is expiring, and you have still not made payment. What if you paid 50% payment? Say reverse ITC on 50% of unpaid amount, right? So whatever is unpaid, the tax on that particular amount needs to be reversed together with 18% interest. But after 180 days, you actually make the payment. You can reclaim the ITC. Now, what if, should I look at the time limit of 30th November or date of filing annual return at the time of reclaiming? No need. Certain cases 180 days condition is redundant, it is not relevant. One is tax paid under RCM. In that case, tax is paid by recipient itself. Then why would I ask the recipient to make consideration payment to the supplier? Because government is getting money from recipient itself. So 180 days is not required there. Supply without consideration. If there is no consideration, how can the government ask me to pay the consideration to take ITC? Amount is added to value as per 15(2)(b). 15(2)(b) is direct third party payment. Recipient, as a recipient, I made payment to a third party and you added it back to the value of supply of the supplier. Then I have made payment not to supplier, to a third party. That is enough. So the consideration is already paid. So I don't need to check 180 days conditions, those cases. The concept of 3 credit ledgers and all is already discussed in that amendment area. So that is sorted. Next is blocked credit. You have to give me a moment. Alright guys, so next is block to credit. Let's look at the concept of block to credit and each of the block to credit item. Okay, so what is the concept of block to credit? These purchases, even if you satisfy all the conditions that is mentioned in 16 subsection 2, you will still not be able to take credit. First one is relating to motor vehicle. So first is section 17(5)(a), which says that if you purchase a motor vehicle and that is meant for transportation of passenger, if the approved seating capacity is less than or equal to 13% including driver, you don't take credit. So the next question would be, what if I purchase a motor vehicle meant for goods like truck, lorry, you can take credit. It's not blocked. What if I purchase a motor vehicle meant for passengers like a bus but seating capacity is more than 13, you can still take credit. Even if you purchase a motor vehicle with transportation of passenger and seating capacity is less than 13, in 3 different cases you can take credit. So if you're a dealer of that motor vehicle, you purchased it to sell it, you can take credit. You are running a taxi service, you are using this motor vehicle for that, you can take credit. You are a driving school, you purchase this motor vehicle to teach people how to drive, imparting training on driving such motor vehicle, you take credit. Similarly, if you are purchasing vessel or aircraft for your business, you can take credit. Like a private jet is purchased for an MD of a company, you can't take credit. The company cannot take the credit of the GST paid on vessel or aircraft. But if this vessel or aircraft is purchased by a dealer to sell it, they can take the credit. Exception. It's purchased by an airline, like a passenger transportation service providing company, they purchased a vessel or aircraft, they can take credit. Okay, Air India is purchasing a new Boeing, purchasing a flight, they can take credit. Say an airline academy, like flying academy or a navigating academy, they purchase a helicopter or a boat to teach people how to navigate or fly such aircraft or vessels, so then they can take credit. A cargo ship is purchased or a cargo flight is purchased, they can take the credit. Now, third block to credit is when you purchase motor vehicle, vessel or aircraft, if your ITC is blocked and on such a motor vehicle, vessel or aircraft, if you pay for insurance, you incur some service cost, you incur some repair and maintenance, they all these expenses will have GST, no? That GST also will not be allowed as credit. So if you purchase, say you purchased a Mercedes Benz for the executive director and paid for that, will you take ITC? No. You take an insurance on this Mercedes Benz for the executive director, on that insurance also whatever GST paid, you can't take ITC. That's the understanding. But on the third case also there are exceptions. What are the exceptions? Number 1, if the above service is taken on motor vehicle, vessel or aircraft on which ITC is allowed. Like say I am doing repair of a truck. So if you purchase truck, you can take ITC. So repairing of the truck also you can take ITC. For general insurance company for motor vehicle, vessel or aircraft insured by them, like an Oriental insurance company who is issuing insurance on multiple vehicles, they can take ITC on the repair expenses they incur on those vehicles for which they issue the invoice. Manufacturer of such motor vehicle, Maruti, will get ITC on those expenses of repair, service and insurance. Other block to credit, next is 17(5)(b), which has 9 items. We will classify them into 7 and 2 because the exceptions are same. First one, food and beverage. Because I cannot say food and beverage is for business or for personal purpose. So if I go and have food and book it in my business, I can't take ITC. Outdoor catering, I can't take ITC. Beauty treatment, I can't take ITC. Health services, I can't take ITC. Cosmetic, plastic surgery, these are all personal expenses, I can't take ITC. Then leasing, hiring, renting of motor vehicle, vessel or aircraft for which ITC is not allowed. Only for, see, if you take lease, on lease, a Benz car for use of the executive director, can you take ITC? No. On purchases, if I don't get any ITC on motor vehicle, vessel or aircraft, such motor vehicle, if you take it on lease also, you won't be eligible for any ITC. Life insurance, health insurance is taken on the employee's life. won't be allowed as any ITC. Okay, so this is the first 7. Now what are the exceptions? Now if you take this inward supply of above services to be used by registered person to provide outward supply of the same category or as an element of composite supply, what does that mean? It's the best thing that we will go to our classic example on that. What is our classic example? Our classic example would be Ustad Hotel. Now, in the movie Ustad Hotel, there is a 5-star hotel called as Beach Bay International. Beach Bay International is purchasing from Ustad Hotel to sell to the customer. Now, what is that Beach Bay International is purchasing? Food and beverage. For what purpose? To sell it to the customers. Can Beach Bay International take the credit of GST paid on purchase of food and beverage from Ustad Hotel? Assume everybody is registered. Can they take ITC? Yes. Why? Because they are making inward supply of food and beverage to provide outward supply of food and beverage, to purchasing biryani, to sell biryani, they can take credit. Or as a composite supply. Now, an airline company is purchasing biryani to serve it to the customers who booked a flight ticket which has also food in it. Certain flight ticket you will get food, right? So that is a composite supply. So if the supply is a composite supply also, you can actually take ITC. If you make an inward supply of food and beverage to provide outward supply of composite supply wherein food and beverage is also part of it. Okay, it's a very logical point. The next is, if the above service is provided by employer to employee as a statutory obligation, then you can take credit. What is it? Say if the service is given, the food is given to employee by employer. Why? Because Act says it. Factories Act is telling that the employer has to give. Then you can take the credit. Understanding? Okay. So above goods or services provided by employer to employee as a statutory obligation also, you can take the credit. To give you an easiest example, Karnataka Shops and Establishment Act says the companies will have to do pickup and drop of women employees on night shift. Now Infosys is hiring leasing motor vehicle to do this. Can they take the credit on leasing of motor vehicle? Yes, because it is done as a part of statutory obligation. Next is membership in a club or health or fitness center is a block to credit. If the employer, the company is paying for the membership of a employee in a club, will not be allowed as credit. So the membership fee will have GST, the company cannot take the credit. Similarly, if the company is paying for employee travel benefits on vacation like LTC, hometown concessions, that also will not be allowed as credit for the employer. Only when it is a statutory obligation, it will be allowed as credit. Next is, you can't really take credit on GST paid on creating an immovable property. How do you create an immovable property? Two ways. You give a contract. What kind of contract? If you do a works contract for construction of an immovable property, so you have given the construction as a works contract, then it will not be allowed as ITC. So whatever expenses you incur and you capitalize to an immovable property, be it a building or land or something, you can't take ITC on the GST paid. Now you do on construction, you purchasing cement, steel and paying GST and then constructing a building, no credit. Even inward supply of goods or services for on construction, no ITC. Where you will get ITC? You are a contractor. Okay, you purchased this to give works contract service to someone. Okay, you are a contractor, then you can take credit. Then works contract, or you're doing your own construction of immovable property, but that immovable property is a big machinery. You're creating a factory with a lot of machineries fixed to the earth, then you can take credit because plant and machinery will be allowed as credit. Now what do you mean by plant and machinery? There is a definition of plant and machinery as a note here. Plant and machinery can be apparatus, equipments, machinery, whatever is fixed to the earth by foundational structure. But when I say plant and machinery, it does not include three things. Can be tested in the exam. What are they? Land and building and civil structure is not a plant and machinery. Telecommunication tower is not a plant and machinery. Pipeline outside the factory is not a plant and machinery. When I say, so these telecom tower, pipeline outside the factory, land and building, you can't take ITC. Construction, when I say, it includes reconstruction, renovation, as long as you capitalize that particular amount to immobile property. Now, other block to credit. What are the other block to credit you have? 17(5)(e), which says inward supply for tax paid under section 10. What is section 10? Composition levy scheme. Now you think about composition levy scheme. If you are somebody who is registered under composition levy scheme, can you collect taxes from the customer? No, but you pay that 1% to the government, right? Can your customer take the credit of that? No. Similarly, if I am under composition levy scheme, when I make purchases, the law prohibits me from taking credit. So if you are under composition levy scheme, on the purchase you can't take credit, you can't even pass on the credit to the customers. Now NRTP, very interesting provision here. Now the logic is NRTP, when they see, government assume NRTP. Who's an NRTP? Non-resident taxable person who's taking registration for a temporary period, right? Okay, like a exhibition registration. Now but you're a non-resident, so somebody coming from Dubai to India for 5 days and doing a business here. Now if you're somebody like an NRTP, you're supposed to import and sell. So they said, if you make domestic purchase, no ITC. Import IGST, I'll give you as ITC. Now if you make inward supply for personal consumption, you can't take any ITC. You should be for business. Then inward supply for goods lost, stolen, destroyed, written off or disposed of by way of gift or free sample. You made inward supply and the goods are lost. It is stolen, it is destroyed. So which means you don't have these goods now, or it is given as gift or free sample, which means when you lost the good, you don't pay any GST, right? So whatever purchases you have made for goods lost, stolen, you can't take ITC also, you have to reverse it. When I say goods lost, it does not mean process loss. Process loss you can take ITC. Please remember, for both normal loss and abnormal loss, you are eligible to take ITC. Okay, for both normal loss and abnormal loss, you are eligible to take ITC. Then, if you pay tax after finding out tax evasion, like section 74, 129, 130, that's also blocked to credit. So you did not pay GST, so government identifies you evaded taxes, you pay GST and ask your customer to take credit, not allowed. Now in case of banking company, if you look at banking company always has taxable supply and exempt supply. So banking companies are given an option when they make purchases. Say if you look at a HDFC bank branch, HDFC bank branch will have interest income, charge income. Interest income is exempt, charge income is taxable. So whenever they make purchases, HDFC bank branch makes a purchase of a laptop, can they take full ITC of the GST paid on purchase of laptop? No, because partially their outward supply is exempt, partially is taxable. So they are supposed to apportion the credit. Now the banks are given a new provision or like an additional option to take 50% credit without looking apportionment. 50% credit they'll take, 50% will lapse. Either option they can go. Next, 18(6) is talking about you supply capital goods after you use it. Normally when you supply capital goods, second hand sale of capital goods, what are you supposed to do when you make second hand sale? You pay tax on transaction value. I purchased a machinery for 10 lakh, I sold the machinery for 5 lakh, you pay tax on 5 lakh. But in case of capital goods, you can't just pay tax on transaction value. So 18(6) read with rule 40 says, if you supply capital goods or plant and machinery after use, where you have already taken ITC, apart from your second hand sale value, you have to see how much ITC you have to reverse and higher needs to be paid. How do you compute the higher? ITC already availed at the time of purchase minus every quarter you are eligible for 5% ITC. How do you compute quarter? Or a part of a quarter. Now, if you purchase in March and sell it in April, you have used it for 2 quarters. Because quarter is already fixed as March quarter, June quarter, September quarter and December quarter. If you use any number of days, you will get 5% deduction. Now compare how much is the ITC already available minus 5% per quarter and balance compared with tax on transaction value, whichever is higher needs to be paid or reversed. But you don't have to do that. If you look at the note number 2, you can pay just tax on second hand sale value if you're supplying refractory bricks, mold, dies, jigs, etc., which will not last for 5 years, and you're selling it as scrap, pay tax only on transaction value. This note number 2 is not yet tested. Rust is already tested in a couple of exams. So section 18 talks about cases of availment of credit and reversal of credit. Okay, let's try to understand this case. What do you mean by availment of credit and reversal of credit? First, we will look at when you can take credit on stock. First, an unregistered person obtaining registration. So you look at when there is an unregistered person, whatever purchases he makes, can he take ITC? No. So whatever stock he will have, he would not have taken ITC. Now this fellow goes and takes registration now. On the stock, whatever he did not take ITC, when he is selling now, he'll have to pay taxes. So they said, if you're an unregistered person obtaining registration, you go find out how much is your stock on the last day of taking registration, and you can claim it now. But can you take ITC on capital goods like machinery you purchased when you are unregistered? No. On capital goods or machinery, you think at the time of purchase of capital goods, you should have GST number, then only you can take credit. Understanding? Second, a composition levies person is switching to normal scheme. When I was under composition levy scheme, I'll end up paying 1% taxes, right? So can I take ITC? No. On my purchase, I can't take ITC. Now I'm switching to normal scheme. Can I take ITC on the stock? Yes. Third case is when a registered person, suppose I am registered because I have two product X and product Y. Product X is taxable, product Y is exempt. So I have taken registration on product Y, product X is exempt, product Y is taxable. On product Y I am paying taxes, product X I am not paying taxes. Now product X is now becomes taxable. So on the purchases I have made on product X, so far I have not paid any taxes, so I have not taken any ITC. Since product X is now taxable, I can now take ITC on the stock that I have on which I have not taken ITC so far. Now very important point, in case of composition levy persons switching to normal scheme or a registered person's exempt supply becoming taxable supply, you can even take ITC on capital goods, but ensure that you reduce 5% per quarter or part. Okay, this is something that we would have discussed in detail in classes. Please remember, they can ask questions. So what you have to add it now as a notice for when you're discussing questions tomorrow evening, like in the plan that I've given you, please look at one question from section 18. Okay, there is a happy limited question, shine and shine question. Please look at one question so that you get full clarity on what to write on this section 18. Okay. Now, so if you're taking ITC on the stock, you have to ensure that stock is purchased within last 12 months, like 1 year. You have to give the details within 30 days, can be extended. If that's a declaration that you have to make. If the total ITC that you're going to take on stock and capital goods is now more than 2 lakh collectively, you have to get it certified by a practicing CA or CMA. Then, where you will have to reverse ITC. Now I am also already a registered person, I am cancelling registration, which means on the stock I would have already taken ITC, now I am not going to pay taxes, reverse. I was under normal scheme, now I am going to opt for composition. I would have taken full ITC, now I will pay just 1%, so reverse all the ITC. My taxable supply is now exempted. So when it was taxable, my product X was taxable and I took all the ITC, product X is now exempted. Now I am not paying any taxes, so reverse all the ITC. Similarly, proportionate reversal of credit also needs to be done. So that's it guys in terms of concept that we have in ITC chapter. What are the type of questions that you will have in ITC chapter? We will have questions where they'll ask you to compute the eligible input tax credit and multiple provisions are being tested there. So which is the next chapter that we will go to? I'm going to give you two options again. We can either go for charge chapter or we can go for registration chapter. There are amendments in registration chapter, so we can look at the registration chapter also as an option. Which one do you think you want to discuss now? That's a tight voting that is going on. Let's see who wins. Then we will start. I'm extremely glad that you guys are still participating and then taking all your efforts to, ensure that you get the best out of all these sessions. That's all, this is all it takes to, be a chartered accountant, guys. Like giving your best out there and then, toiling the night. So that's all. I'm more than happy to put my efforts into it. But when I started, I thought I will not be able to pull off today. I was sick for last 2 days. But then I thought, okay, let's do it. This is what I wanted to promise you guys and then do. Okay, so I think more than enough votes is for registration chapter. So I am moving to registration chapter before I do charge. There are a few amendments which are interesting, and I think registration chapter is now kind of an A category because of amendments. Every examination, there's one question or the other from this chapter. Only these many provisions for us to learn: section 22, 23, 24, 25, 26, 27, 28, 29, 30. 22 already discussed, person liable to register when their threshold limit is crossed and their aggregate turnover is above that. 23, person not liable for registration. 24, compulsory registration irrespective of their turnover. Certain people will have to take mandatory registrations. Who are those people? 24, compulsory. 25, procedure for registration. There is some Aadhaar authentication that we'll have to look at, some time limits that we'll have to look at, which I will show you a different chart that you can use to remember this provision. Then deemed registration is just one line provision. 27 talks about CTP and RTP. Short note, it is a short note question that can test you, or they can ask you a question inside your MCQ part. Then 28, amendment to registration. What if I want to change something in my registration certificate? What will I do? 29 and 30, these are the villains or the heroes of this examination. One of these is going to be there in your exam. Wouldn't this be amazing if my predictions all comes true? I hope. I'm good at predictions. Okay, so let's look at these provisions now. How do you understand about registration? It's the simple chart that you'll have to look at. Supplier can be making only intra and also inter. If he's only making intra, look at the threshold limit and then ask him to register. If he's making inter, then ask, is he making interstate supply of services? Yes. Then this threshold applicable, 20 lakhs or 10 lakhs depending upon the state. In TNM2 it's 20 lakhs, other states. Sorry, in TNM2 it is 10 lakhs, other states 20 lakhs. If you are interstate supplier of goods, then if you have to ask the question, are you supplying handicraft goods? Then threshold limit is applicable for you. If you are supplying other than handicraft goods, then compulsorily you'll have to take registration. Apart from that, who else has to take compulsory registration? So compulsory registration is given in section 24. These are the people who will have to take compulsory registration. Number 1, person making interstate taxable supply. Remember the wording is taxable supply. Okay. Now this was a provision, but there was a notification that was given which gave some relaxation to that. What are they? Person making interstate taxable supply needs to compulsorily register under GST under section 24 of CGST Act. There's an exception to that. Threshold limit will be applicable in case of interstate supply in the following cases. If it is supplier of service, then threshold limit is applicable. Handicraft goods is also threshold is applicable, including casual taxable person doing a handicraft goods. Say, I'm from Pondicherry, I'm coming to Chennai for a exhibition and I'm making handicraft jutas or handicraft chappals. You don't need to take registration. You can look at the threshold limit because CTP supplying handicrafted goods also will get the benefit of threshold limit. And even if you're supplying services through e-commerce operator, you will get threshold limit. So if you look at service, everybody will get threshold limit. In case of service, we can say like this. If you are intra or you make inter or you're doing job work or you're doing supply through an e-commerce operator, in all these cases, threshold limit is applicable. If you see service in your question, you say threshold limit is applicable. The moment you see, you look at handicraft is there or not. Then, who else is to take compulsory registration? A person required to pay tax under RCM. If you are liable to pay tax under RCM as a recipient, take compulsory registration. You can't look at the turnover limit. Casual taxable person, NRTP, non-resident taxable person cannot look at the threshold limit. Then, e-commerce operator. Every e-commerce operator liable for TCS under section 52. Every e-commerce operator liable for TCS under section 52 will have to take compulsory registration. E-commerce operator liable for TCS example is like Amazon, who are supplying others product. Okay, they'll have to take compulsory registration. Now, person who is supplying goods, not service. Okay, service threshold is applicable, so you can highlight that. Only goods through e-commerce operator, because service was also there, but there's a notification which says service can take threshold limit. Now, e-commerce operator under 9(5) like Uber. So there are three set of e-commerce operator related compulsory registration. One, like Amazon, Flipkart, e-commerce operator who are liable under TCS. Second, supplier of goods through e-commerce operator. Third, e-commerce operator under 9(5). Then, person liable for TDS. So TCS, TDS person cannot look at threshold limits. Then, input service distributor cannot look at threshold limit. Person making taxable supply on behalf of another, like an agent, cannot look at threshold limit. OIDR services, like online information database services, like say an OTT platform from outside India. If they are providing services to an unregistered Indian, like you and me, customer, then these guys who are from outside India providing OIDR services to an unregistered in India will have to register and then pay GST in India. Now, what is section 23? It talks about person not liable for registration. Who's not liable for registration? Handicraft, those are questions. Handicraft also has the same service threshold limit, 20 lakhs and 10 lakhs. It came in one common notification. Okay, section 23, person not liable for registration. Even if certain people have turnover more than the threshold limit of 40 lakhs, 20 lakhs, 10 lakhs, they don't need to take registration. Example is if he is supplying only exempted or not liable to tax goods, only supplying petrol, diesel, only supplying alcohol, only supplying fresh vegetables, only into education service or healthcare, they don't need to take registration. They are only into advocate services. Person is exclusively into exempted or not taxable. So why should they take registration? Second, an individual or HU of agriculture, not companies. Okay, an individual or HU of agriculture is to the extent of produce out of cultivation of land. If they are having produce out of cultivation of land, whatever may be their turnover, they are not need to register.
Other specified category, a person who is making outward supply which are fully taxed under RCM. Example, an advocate is having turnover of 1 crore, which is more than, what is that turnover? 1 crore, which is more than threshold limit. But out of 40 lakhs is exempted because it is given to an individual. Whether this 40 lakhs should be part of the aggregate turnover? Yes. Then there is 60 lakh which is given to Reliance, but for which tax is payable directly by Reliance to government under RCM. Is it part of the turnover? Yes, both of these are turnover for advocate, but this is exempt and this is paid under RCM by the customer. So even if this advocate take registration, there is no taxes payable by them. So a person whose entire tax is paid under RCM, wherever it is taxable, then they don't need to take registration. Then what's the procedure for registration? Within how many days? Within 30 days. If I apply within 30 days, my effective date would be date in which I became liable. If I don't apply within 30 days, my effective date will be date of certificate of registration. What's the procedure for taking GST registration? It's a 3-step process. You go to first take a TRN. You give you fill up part A like PAN, email and phone you get TRN. Within 15 days you'll have to fill up application. Give all the details, fill part B and sign, and then you will get ARN, application reference number. Now earlier bank account details were mandatory, now it is not mandatory. This is rule 10A, very important to remember the rule number also now. Rule 10A says that bank account details is not mandatory now for taking GST registration. What you can do? You can actually submit bank account details after getting GST registration within how many days? 45 days, or the first 3B, due date of return under section 39, whichever is earlier. Mark this as important, they have asked in one RTP. And this is relevant. If you don't give your bank account details within this time, you are liable for COMO2 cancellation. Okay, so if you don't give within these many days, this is called rule 10A. If not, you can be liable for COMO2 cancellation. Okay, then okay, so after you generate an ARN, you will have to do an Aadhaar authentication. That's an additional process that now you have. Now the officer will process this. The officer will get how many days time? 8 working days. Officers will always get working days. 7 working days, not 8. Where did that 8 go? 7 working days time they'll get. Within 7 working days, they can do either approve or they can give you a show cause notice. Once you get show cause notice, and throughout GST, you have how many days to reply? 7 days to reply, not working days, 7 days to reply. If you reply within 7 days, they will again take 7 working days and then give you an approval or rejection. See, if the application is not processed within 7 working days or after the reply within 7 working days, the application is deemed to be approved. If the officers delay beyond that, it is deemed to be approved. Now, what is section 26 deemed registration? You went to an SGST officer or like UTGST officer, and that officer gave you registration. Is it valid under CGST? Yes. SGST, CGST, it's always cross valid. That's section 26. What is section 27? Special provision relating to CTP or NRTP. There are 2 types of persons: casual taxable person and non-resident taxable person. First, we will look at the definition. Okay, first we'll look at the definition, and then we'll look at the additional provision that we have for CTP and NRTP. Okay. Casual taxable person, is he somebody who's having a PAN? Yes. Is he having business somewhere in India? Yes. Is he coming to a new state? Yes. Is he planning to do permanent business there? No. So he's a person who's occasionally undertaking transaction involving supply. in the course of furtherance of his business in India, but in a state or union territory where he has no fixed place of business. So he'll have normal form PAN-based registration. Now NRTP, is he a resident? No. He will have a PAN, he might not have a PAN. Is he having any residence in India? No. So he is somebody who is coming to India for occasional business, who is not having any place of business or residence in India. So you might have to give a representative's PAN and his passport and then take registration. Normally, a person needs to apply registration within 30 days. Can I give them 30 days time? No. They'll have to apply 5 days before commencement at least. Their validity is up to 90 days, can be extended for another 90 days, max 180 days. So they don't need to file any annual returns. They'll have to take compulsory registration. Now NRTP and CTP needs to advance deposit taxes. This is the only case wherein an advance deposit needs to be done for taking registration. Unique identity number, I have already told you this. United Nations, financial institutions, etc. They want to take UIN so that they can take refund of the tax paid on purchases. It is a centralized number. They are not considered as taxable person. Not everybody will get it. It requires recommendation from ministry to get a UIN. What if I take GST registration number and then later I have some changes that has happened? Say my address got changed, my mobile number got changed. What will I do? Do I have to obtain new GST number? So the answer is, when PAN of a person changes, except for PAN changes, other things you can actually update your existing GST numbers. But PAN changes, GST number altogether changes. Okay, so amendment of registration can be of two types. One is core field, another one is non-core field. Non-core field means like very simple, like email ID, phone number. They can update it on the website itself, no approval required. But core field requires approval. Within 15 days, you'll have to apply. Next 15 working days, they will give you an approval or a show cause notice. After show cause notice, you have 7 days to reply. After show cause notice, they will get 7 days to approve again. Like what will be a core change? Name change, address change, addition, deletion of partners, directors, etc. Deemed approval if proper officer fails to take any action within 15 working days of application or 7 working days of reply. Next is most important one. 99% of cases there will be a question from section 29 or 30. Again, 99% is for me, 1% is for ICI. 99%. If again I'm telling you, if I am the examination question setter, I will put a question from section 29 and section 30 in the next coming May 23 examination. Am I the examination setter? Who knows? Section 29 is cancellation or suspension of registration. There are two types of cancellation or suspension. One is voluntary by the registered person, another suo motu. Most important, suo motu this time. Now, what is voluntary cancellation? I discontinued business, I transferred my business, I changed my business from sole proprietor to partnership, from partnership to private limited. Some kind of changes happened. Or I'm no longer liable, then I can apply to cancel within 30 days. Okay. Now, the moment I apply for cancellation, the date in which I apply for cancellation or the date on which I sought cancellation, say I applied today, I want cancellation after 10 days. So that whichever is later. So whenever there is cancellation, so again one more examination tip. In case of cancellation, always remember whichever is earlier will not come, whichever is later will come. So any question on cancellation, take the later date. Okay, so from the date in which you apply for cancellation or the date in which from you want the cancellation, whichever is later, that date onwards your registration stands suspended. It's a buffer period. In case of suspension of registration, you cannot make any taxable supply. You will not be required to furnish any returns. Now let's look at the buffer period in one example. A registered person, Mr. Raju, look at the example here. Raju is applying for cancellation. Why? He is no longer liable. He applied on 1st July. He wants cancellation from 15th July. From what date onwards you will be suspended? 15th July. So you're making supply till 1st July, made an application. but till 15th you're still collecting taxes. From 15th onwards you can't collect taxes. Now 1st September cancellation order came. Okay, so from 15th July onwards you are not anyway collecting taxes, you are not filing any returns. That's the status you have. It's a buffer period before cancellation order. What if you did not get cancellation? They rejected your cancellation application. Then those period when you are suspended, no, you are supposed to go back and then pay taxes. You'll have to issue a revised tax invoice for this period. Suspension period supply will become taxable as if it is inclusive of GST. Revised tax invoice to be furnished. That's the impact. Next is suo motu cancellation by proper officer. Very important this time. What is suo motu cancellation? Why would the officer cancel your registration? Multiple reasons. There are 5 set of reasons that I have listed here. This is coming your exam, man. Please remember these. Number 1, contravention of provision. 5 provisions you did not satisfy, your registration can be cancelled. Number 1, you're not conducting business from declared place. You made invoice without supply. You made profit out of GST, like anti-profiteering provision you booked under. Rule 10A, what is Rule 10A? You did not furnish banking details. Rule 86B, you taken 100% credit, wherein you are allowed to take only 99% of credit because your taxable supply is more than 50 lakhs in a month. 86B is the provision there. Section 16, you did not satisfy conditions for availing ITC. Okay. Second, you did not file 3B continuous 6 months. In QRMP, 2 months. In CLS, 3 months from the end of the financial year. You did not commence business within 6 months from registration. You registered 6 months, you did not commence your business. Your registration itself was obtained by fraud, willful misstatement, suppression of fact. In for more than 1 or more period, your GSTR 1 is more than 3B. Any one reason, your registration actually can get cancelled. Suo motu cancellation again on the screen. Contravention of provision, not conducting business from declared place, invoice without supply, anti-profiteering, Rule 10A, Rule 86B, Section 16. Not furnishing returns, CLS not filing GSTR 4 within 3 months from the end of financial year, QRMP scheme not filing 3B for 2 continuous quarter. Normally 6 months you did not file 3B. Then third case, you are not commenced business within 6 months. Your registration itself was due to fraud, misstatement, suppression of fact. Your outward supply in 1 is more than 3B. Okay. Now, so if your registration is suo motu, the officer has a power to come and cancel your registration. He will give you a shock cause notice. It can be retrospective also. Now there's something called as revocation of cancellation. If you get cancellation by way of suo motu, even after getting the cancellation order, you can go back to the officer and then ask him to revoke your cancellation. This is only applicable in suo motu. Within how many days you will have to do that? Within 30 days from the order of cancellation by yourself. But you can go to your assistant commissioner and then get another 30 days extended. Go to commissioner, get another 30 days extended. And after you submit revocation, they will give you an order within 30 days or they will give you a shock cause notice, 7 days to reply for shock cause notice throughout GST and 30 days for the order. Now look at the second branch there. I'll read it with me, okay. Cancellation is due to failure to furnish return till cancellation to be filed before revocation application. If the revocation is still revocation till the order of cancellation, you will have to give the return within 30 days. There is a deemed provision, revocation or cancellation in SGST, UTGST is deemed in CGST as well. Let's look at this with an example because it's important. I'll walk you through the entire example. Okay, 2 minutes. Mr. Raju did not file return from 1st January onwards. Now officer gave show cause notice after a year, like 15th Jan 2022. Raju was supposed to reply within 7 days. Did he? No. Order came on 15th of February. Now after getting the order on 15th February, Raju wants to now apply for revocation. Compute the deadline before which he has to apply for revocation. By his own, he can apply within 30 days. So which means in February, 13 days left, 17 days, which is before 17th of March, within 30 days, he can apply by his own wish. Now after that, can he? Yes, another 30 days if he goes to joint or assistant commissioner till 16th April, he can go to joint or assistant commissioner and do it. Now, if he wants to do after 16th April, can he do it? Yes. He has to go to commissioner and he can do another 30 days, which is before 16th May. He did apply for revocation on 10th May. Commissioner approved it. Now what he has to do first, file all the pending return till 15th February. Your registration was cancelled because you did not file return on time. Now file the return first and then go ahead with, file the pending return, then only go ahead with the revocation. That's the first condition. Then he applied on 10th May, he got the revocation on 31st of May. Even after filing all the return till February, from 15th February till 31st May, another set of return is pending. That needs to be filed within next 30 days, that is 30th of June. That's the condition. Now Aadhaar authentication. Why Aadhaar authentication is required? A lot of fake registration. So they said, except for 6 people, all others will have to go through Aadhaar authentication. Who are these 6 people who need not go for Aadhaar authentication? The code word is LDS CUP. L for local authority, D for department of government, S for statutory body. These people need not go for Aadhaar authentication. C for person who is not a citizen of India. U for person who are having unique identity number. P for public sector undertaking. These people need not go for Aadhaar authentication. Now what's the important provision if there is no Aadhaar authentication? So the provision is like this. If somebody is liable for Aadhaar authentication, either they do it or they don't do it, the procedure is like this. After you fill all the details and generate an ARN, you will get 15 days time to do the Aadhaar authentication. If you do within 15 days Aadhaar authentication, the date on which you do Aadhaar authentication will be the date in which the application will be submitted. If you don't do Aadhaar authentication for 15 days, your application will be as if you don't do Aadhaar authentication. That is, on the 15th day, it will be getting uploaded. So that will be the date of application. But you will get registration only after 30 days of time. So if you don't do Aadhaar authentication, the officer will get 30 days to process your application. There will be physical verification. That's the provision. Now let's look at this in a different chart now. Okay, so a person who is required to do Aadhaar authentication and not done Aadhaar authentication, first they generate a TRN. 15 days they generate an ARN. Another 15 days to do Aadhaar authentication they have not done. But on the 15th day the application is gone. The officer will get 30 days to do physical verification. After that, officer can give you registration or give you a show cause notice. If they don't do either of them for 30 days, you will get a deemed approval. Now suppose you got a show cause notice. You will get how many days to reply? 7 days. After you reply, officer also will get only 7 working days to reply on your to give registration or rejection after your reply. If they don't do within 7 working days, it is deemed approved. Next option. You are supposed to do Aadhaar authentication, you did Aadhaar authentication. So TRN, after that 15 days to do ARN, then with 15 days to do Aadhaar authentication. So the date of Aadhaar authentication would be the date of application. Now the officer will get only 7 working days to reply. Either give show cause notice or give registration. If not done, deemed. They gave you show cause notice, you get 7 days to reply. After that, they'll get 7 working days to reply or approve or reject, if not deemed approved. Suppose you are not required to do Aadhaar authentication, you are LDS CUP, which means after TRN, After ARN, your application will immediately get submitted because you're not supposed to do other authentication, but the officer will still get 30 days time to do physical verification of your place. They can give you show cause notice. After that, you will get 7 days to reply, and then 7 working days for the officer to either approve or reject. This is the structure in which registration chapter is structured. Okay, so all of these points are important. We have looked into those. You can always refer back and then look at these provisions. Okay, so it's already almost 12 o'clock. So what I'm going to do is that I'm going to close our session for today with this. I know we have certain procedural provision and chart chapter on the structure of chapters to look at, which I am going to do as a session for tomorrow evening. So I have work tomorrow. I'll come back and do those sessions, a quick recap as well. So allocate maybe 1 hour for that if you guys are interesting. So probably I don't want to stretch beyond 12 o'clock. If I do that, then your tomorrow gets affected. I don't want to do that. I want you to like sleep, get up early, and then start doing income taxes. And rest of the topics we will, if I allocate some time, I'll do it in the evening. Okay. So I hope whatever we have discussed has been fruitful to all of you. We have done chapters of exemption, which is large. We did all the amendments. We did look at all the provisions from ITC valuation. We have looked into registration chapter as well. So hopefully we will be able to come back and then do rest of the session soon. So get good sleep today, deep sleep. You have done good for the time. Like think, like after the examination, you have covered so much in GST. So that's a kudos, pat on the back kind of an effort. So now go ahead and then prepare for income taxes, and then wait for me in the evening to do that rest of the revision. I'm going to ensure that I'll update the timing on the channel itself. Tomorrow I'm traveling, so it'll be late in the evening again for tomorrow. So thank you for your patient listening, and good night everyone.